This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. The tape signifies economic slowdown. Paul, that's what I see. To me, oil is front and center. Nobody's talking about it. You're going to get a 79 print on Brent crude, a 75 handle on West Texas, now 76.67. We had that great conversation with Julian Lee.
Yes,
is this really what, forget about AI, are we pricing in global slowdown?
Global slowdown. I think that's one of the concerns we saw in the market action yesterday. Yes, there was that AI trade, if you will, the unwinding to a certain degree by certain traders of some of those AI moves there, and the NASDAQ really taking it on the chin yesterday, down about 7-8% just in the past 2 weeks. And that's on, some disappointing earnings coming out of some of those big tech names over the last couple of days. But also, Tom, as you mentioned, maybe just a little thought of this. This is a slowing economy. But we'll get that GDP print today, Tom.
We'll get the GDP print. I'm really looking forward to it. It's been more buoyant, but you really wonder, this quarter that we're in, where will we be September 30th? Where American Airlines will be September 30th is lowering prices. They come out moments ago down 7%. Rich, thank you for that factoid. Down 7%. Huge guidance shift. I'm going to take the low point. 225 goes to 70 cents.
Yeah.
They have assigned seats.
They have
Southwest Air is. Lisa, have you ever been on Southwest Air?
I have, and a lot of fights actually break out because
There's
of
fights.
that. Yes.
But do you have your favorite?
Yes,
Do you
it's
have
a
your
free-for-all.
favorite Southwest Air seat?
I do. I like the aisle. I stick with it. I got to fight for it, but it's hard because people try to save seats. If someone goes in earlier, that's the issue there. So
My favorite
way to
seat,
fly.
60J,
60.
British Air,
Yep.
British Air, upper deck, 747.
Okay.
Red Oak Keeper of the Amex makes this happen.
Yep.
It's like you're on a private jet. It's
Sure.
like being, Francine usually has a Gulfstream.
Right. So you
There
have,
we
you have to rough it a little bit.
Southwest Air, they're gonna blow up Southwest Air with activist shareholders. Seriously, 50 years of a way they do business, and they're changing that with an attitude of justice. We're going to talk luxury later. Andrea Feldstead will pick up the pieces of a blown-up luxury economy. Right now, from the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
Yeah, you got it. And futures just trying to battle back after this big tech sell-off hit the NASDAQ with its worst day since 2022. Right now, NASDAQ futures down 0.2%, 41 points. We have S&P futures down 0.1%, 7 points. Dow futures little changed, up about 18 points. We have the 2-year yield at 4.36%. That's down 6 basis points. And the 10-year yield at 4.22%. And that's down 6 basis points. Washington today, the government report on second quarter economic growth. Economists forecasting a modest gain of roughly 2%. Also on the agenda at 8:30, Wall Street time, jobless claims for last week, durable goods orders. To earnings we go. We'll start with IBM, up 4%. It reported a jump in bookings for its AI business, better than expected revenue on top of that. Now let's get to those airlines. American, full year adjusted EPS lower than expected. Their shares down 6%. And Southwest down 3%. Second quarter adjusted EPS beat estimates, but yes, the big news is the ditching of the open seating policy. Also said new premium class option is going to happen, and it plans for red-eye flights. One thing that they are sticking with, bags will continue to fly free. There you go. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. Got a great lineup today. Stuart Kaiser will be along to reset this equity market. Anastasia Amoroso, brilliant. You said she's gotten a little more cautious?
I think so. We'll see. I mean, the question is, is this just a slight pullback in the market, Tom, or is it the start of something more?
On the great sailboat here, floating off of Cape Cod out to Martha's Vineyard and all of New England, the keel of the boat in investment management is Margie Patel with Allspring Global Investments. We get some sound advice in this mini crisis we're in right now. Margie, you've seen this 4,000 times. When does a pullback become important to Margie Patel?
Well, we're beginning to see signs of a pullback in the economy, and I think it goes back to the Fed. They're balancing inflation above their target with signs the economy is really slow, and Powell's shown sensitivity to the unemployment numbers. So it wouldn't be surprising to me to see the Fed accelerate their cutting rates here, feeling that they really need to get.
On a broader perspective of our listeners and viewers with a 3-year short-term view or a long-term retirement plan view, is it just simply the Fed to the rescue? If they cut rates, that will heal the tensions within the economy?
No, I think that a quarter point, half a point isn't going to make any difference fundamentally. The economy clearly is in a slowing mode. Globally, it's slowing. I think right now we're in a mild correction, not some kind of a permanent crash to down 20% and staying there. So I think it's just a choppy period. Market recognizing slower growth.
Can we have a moment of silence for David Rosenberg? He absolutely nailed this, among others.
Among others. Margie, so what are you taking away from some of the earnings we've seen so far? I mean, some of the sell-off yesterday was maybe perhaps in response to some weaker numbers coming out of some of those tech names. What have you seen? What are you looking for?
Well, we've still seen overall so-called better than expected earnings of up, say, 8%, which isn't bad. We've seen companies raise dividends. Dividends are up year over year about 8% also. So that's a good sign. They're confident in cash flow. But we've seen a very mixed picture in earnings so far, especially from some of the tech leaders. And other sectors such as Airline, such as autos, have reported very disappointing numbers, retailing. So that says to me we're going to be in a choppy period, typical of an election year, and hopefully have a strong finish as we should historically. But I think just chopping around and going a little lower before we base out.
To the extent the Fed were to do something in terms of rate cutting in this July meeting next week, would that be an ominous signal for the market that, maybe this economy is not as strong as the Fed initially thought?
Well, they'd be recognizing reality because clearly when you look at the data points, you can see there's a deceleration going on. But I think it would show the Fed responding to the slowdown in the economy and having rates that should be lower for the level of inflation, for the level of economic growth. So they may take it negatively and then realize it's actually a positive, although it may take 6 to 12 months to get the effect of it.
It's off your remit, Margie, but I'm going to go there. We've never seen the AI hopes and dreams. One of our great themes yesterday was, do you bucket different types of tech companies? I mean, you grew up in the milieu of Wayne Labs, DEC, and the rest of it. You see them come and then you see them go, Margie Patel. Do you have a safe AI pick?
No, I think that most of the large cap techs have done well. I think they'll continue to do well. I think the risk is that we have a little PE compression, price earnings ratio going down, which we just like as if they had lower earnings. But no, I think that's part of the permanent development in technology and nothing like the internet bubble, say, going back to 2000.
In fixed income, Margie, I mean, we're seeing, yields come down here. How are you thinking about opportunities in fixed income?
I still think that high yield is the best place to be, as it's been for the last couple of years, actually. The problem is the returns are pretty modest, say anywhere from, say, 6.25% to 7.5%, with bonds priced at a slight discount, maybe 4 cents on the dollar cheaper. But I think with defaults relatively low, I think that's an attractive place. Modest total return, but over the next few months, it might be competitive with equities in low single digits.
Margie, thank you so much. Margie Patel with Allspring with us this morning. Greatly appreciate it. They're in use of cash. And of course, her legend is to really focus on dividend growth, maybe a bit off the mark. Maybe not the number one thing we're looking at right now. Right. Okay, Paul, Google. We all blew up. I guess they did well, but there was, CapEx worries and all that. Pre-pandemic revenue, $162 billion.
Right.
They've done a double.
Yep.
It's $328 billion. The gross margin was 55 beeps in 2019. It's now 200 basis points higher. I don't get it. EBITDA is almost a triple.
Yep.
Free cash flow is a double. 31 billion pre-pandemic, did well in the pandemic and all that, stay at home. Now it's 61 billion and we're modeling out 75. billion. These things are profit machines.
Unbelievable.
And I guess they've pulled back, but then what? Because then there's another 90 days of being a profit machine.
Tons of free cash flow. And again, the stock is up about 24% year to date, up 40% over the past 12 months. So the stock's performed pretty well. I mean, you think about, I think what investors were a little bit concerned about over the last day or two was just how much money they're spending on their CapEx and AI. But again, my response yesterday to Mandeep Singh was, boy, if you can't trust this management team to wisely invest their capital, who can you trust?
Who can you trust?
I mean,
is NVIDIA getting all the money?
Exactly. I think so. All those chip makers are. You ask Margaret, the AI play, a lot of investors will tell you the safe AI plays is the semis across the board.
We'll have to see red and green on the screen right now with our news in New York City. Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Joe Biden framed his decision to drop out of the 2024 race as a bid to unify the nation under a new generation of leaders. It was Biden's first speech since ending his re-election campaign and political career.
It's been the honor of my life to serve as your president. But in the defense of democracy, which is at stake, I think it's more important than any title.
We got reaction from Tina Fordham, founder and geopolitical strategist at Fordham Global Insight.
It's the end of an era. Joe Biden has served the country for many decades, and he's passed the torch. Some would say he took his time about it, but I think we have seen very clearly in the momentum behind Kamala Harris that there's a huge appetite for energy and for new voices in this race.
Tina Fordham, founder of Fordham Global Insight. At his first campaign rally since President Biden's exit from the race, former President Trump turned his attention to Vice President Harris. Trump, speaking in Charlotte, North Carolina, says President Biden is unfit to lead, and so is Harris.
She'll destroy our country if she's elected, so we won't let her be elected. We can't let that happen.
Trump called her his new victim to defeat. Harris, meanwhile, will speak today to the American Federation of Teachers in Houston. Israeli Prime Minister Benjamin Netanyahu will meet with President Biden and Vice President Harris in Washington today. Yesterday, in an hour-long speech to Congress, Netanyahu tried to shore up U.S. support for Israel's war with Hamas.
For the forces of civilization to triumph, America and Israel must stand together.
Netanyahu heads to Florida tomorrow to meet with former President Trump. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
I'm trying to figure out a way to follow the Olympics. I mean, I'm not going to sit there and look at, what are there, 3 platforms, 4 for NBC or whatever. Gotham is doing it for us. Which bars do you watch the Olympics in New York City? I mean, that's something that's helpful.
Well, it's NBC Universal's got a gajillion cable networks, so you're going to have to try to figure out which, and including their streaming services, where all these things are. But I think it's going to be kind of just hunt and peck kind of thing.
Remember the old days when they had to, everything was tape delayed and everything was compact in from 8 till 11, right. And it was easy to watch. Now it's all over the place. How
about the BK Backyard Bar? You can play volleyball. It's got a sand pit in the back.
All right.
Can you see me playing beach volleyball in Brooklyn?
Absolutely.
Taking down some overpriced craft beer.
Yeah.
With your IPA, that's what the kids are drinking.
Lisa would kill that.
Yeah, exactly.
She'd like BK Backyard Bar. Good morning.
David Gura, maybe.
Yeah, Gura.
I'll just say we know David Gura, Tom.
Yeah, he's cutting. Yeah, I could just say that. But the Olympics are upon us.
Yep.
I'm trying to get some enthusiasm.
The soccer started already. I think the U.S. lost to France.
And rugby also.
And rugby. Okay, there you go.
NYCB down 11%. We'll have more on that. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. A wave of earnings misses, worries about U.S. economic growth really driving losses on Wall Street. Right now, we have NASDAQ futures, little change, but down 10 points. S&P futures down 4 points. Dow futures up 2 points. We have the 2-year yield at 4.37%. That's down 6 basis points. The 10-year yield at 4.23%, and that's down 5 basis points. To commodities, spot gold lower at $2,375 an ounce. You have Brent crude lower at $80 a barrel. WTI crude $76 a barrel. Shares of Stellantis lower, down 7%. The company considering price cuts, bringing back older models, including the Dodge Charger, to help deal with that massive drop in sales during that first half of the year. Then we go to Ford, down 13%. Quality problems with the vehicles led to a surge in warranty costs. Second quarter profit fell short of expectations. And finally, Nissan slashed its earnings outlook, citing weak sales in Japan and the U.S. Shares down 6% in Japan. That is your Bloomberg Business Flash. Tom and Paul.
Thank you. Paul Sweeney said something yesterday really important. We were looking at earnings, and Gina Martin Adams came in here, and we both agreed she was very optimistic about the earnings that we're going to see.
Yeah, she was early on this, a couple months ago. So we pay attention to Gina Martin Adams. But again, we're having seen some misses here, as Lisa was just reporting. Kind of different industries.
Yeah. What we're going to do is stop on a July morning with our heads spinning over the American history lessons of the last 10 days. We have a guest, esteemed in Washington, Libby Cantrill with Pimco, out of Brown, out of Harvard, with some serious effort at Morgan Stanley to understand inside the Beltway. And I just want to stop, and I want to talk about two senators and how they were different. How is I had the honor of speaking with Senator Obama by the Bruin Zamboni when he was a senator. Nobody knew who he was. How was Senator Obama different from Senator Harris in Libby Cantrill's world? Or were they the same, just two young junior senators?
So Senator Obama actually had fewer years of service than Senator Harris did. Remember, he was only in the Senate for 2 years before.
2 cups of Sanka.
Yeah, right, exactly. And she was there for 4 years. I do think that maybe a similarity, though, is that they both knew that they were going to be pursuing national office when they started their jobs in the Senate. So they knew that the Senate was not sort of their landing place, that they had. And I think that if you look at both of their records, that's sort of emblematic. Some of the things that they voted on were probably trying to tee them up for a national race versus just, again, staying in the Senate.
I'm a prosecutor, an attorney general in California. I'm parachuting into the Senate, which is all collegiality, smiley teams, put your napkin in your lap in the Senate lunchroom. The rap on her is she's had trouble building a team. Discuss that.
Yeah, I mean, she's had, I think, management staff issues really since she was a DA in San Francisco. So this is something that it will be a liability, obviously, building a national campaign in a very short period of time, basically building a plane while you're flying it, is challenging to begin with.
But you've lived this. Do they change? Can she improve team building?
I mean, there are a lot of tailwinds, to continue the airplane metaphor. She has, she has the entire kind of Democratic Party apparatus. She has lots of national figures who are endorsing her and supporting her. So people are incredibly incentivized to see her succeed. In some ways, she might actually benefit from a shorter campaign because you don't have the time to sort of pick her apart, pick the campaign apart that you would in just sort of a general election cycle. So this is so extraordinary. I don't think those are going to be the things that are really going to weigh on voters. What I think her liability, though, is that platform that she ran on in 2020. And of course, for the Democrats, it may not be an issue, but to get those swing voters in those 6 states that she needs to in order to win the presidency, the fact that she has advocated for Medicare for all, the fact that she basically is, talked about open borders or what have you, or fewer, repercussions for folks coming over the border. I mean, all of those things will plague her. So, Tom, to your question, will her management style, maybe that will plague her? Maybe. But is that going to be the big headwind going into November? Probably not. It's going to be more of trying to defend that record.
It seems like the Democrats have some renewed momentum here. What are you telling the fund managers at Pimco about what's happened over the last 72 hours and what the next several months might entail.
Yeah,
what are you telling the PMs?
Yeah, of course. While the horse race may or may not be interesting, the thing that our traders really care about is like, what does this mean for the economy? What does this mean for markets? And I think that in many ways, this is just reset the race, right? And so if you were putting odds on a Biden presidency and sort of the composition of Congress, you would have said, wow, the chips are really stacked in favor of Republicans last week. That has changed. And I think that is not only the top of the ballot, but really the down ballot. I mean, the composition of Congress really matters for the things that actually investors care about, for fiscal policy, for tax, and for spending. And a Republican sweep looked like it was much more likely as of last week than it does today. So of course, it's still early days in how Harris will do versus Trump, but there's so much more renewed enthusiasm. And I think the big challenge for Democrats going into the general, if Biden were on the top of the ticket, was lack of enthusiasm. And that has changed.
Right. I mean, what do you make of, the fundraising? We had a story yesterday on the Bloomberg about how some of the big Wall Street folks are lining up behind Harris. But I guess what got me was the reporting that $100 million was raised by the Harris campaign in the 24 hours after Biden announced he was stepping down, and 62% of those were new donors.
Yeah, and they were relatively small donors.
Yes.
And I think that was the thing. I mean, these big donors are kind of coming back home, if you will. They were sort of sitting on the sidelines when Biden was the top of the ticket. But really, the fact that there's so much more renewed energy, the fact that she is appealing to some of the constituencies that the Democrats need in order to win, like young people and like African Americans, and I think the grassroots fundraising sort of is a reflection of that.
In the craziness that we're living, folks, I do work more than 3 hours a day. It's hard to believe. I don't work a day like Cantrill, but it's fine, or Lisa Mateo. But Libby, I was reading the Pew Research topology report where they divide Americans into 9 groups, and there's 3 or 4 shades of Democratic Party. She's going to be painted as a Bernie Sanders, Liz Warren progressive. Is she?
Is she that? I don't know. I think that's another issue, is that voters don't really know what she stands for. Mm-hmm. I mean, obviously, when she was the DA, when she was the Attorney General in California, she could have been characterized as center-left, almost even centrist in terms of some of her approach to sort of law enforcement and what have you. But when she got to the Senate, and this is your previous question, Tom, when she got to the Senate, she knew she was going to be running for a national office, and she did pivot pretty far left, again, on some of those things like Medicare for all, like defunding the police, like stopping fracking. And these issues will matter to swing voters. So I think this will be her challenge, is almost reintroducing herself to voters in a way that maybe is more reflective of where she really stands. Because the liberal, the sort of progressive liberal that we saw in 2020 running for the primary against Elizabeth Warren, she will not be able to win the presidency if that is her platform.
Who's debating who going forward? I mean, Harris is going to debate Trump, Vance, and how does that work? And who decides how that plays out?
Yeah,
because I'm looking forward to that. I'm looking forward to
I do think, and again, I think one of the reasons why there's so much renewed optimism is because Harris, like her or not like her, I mean, will be able to litigate the case against Trump better than Biden was able to, right? In terms of the June 27th debate. So the running mate, her selection of the running mate, I do think will be important just in terms of reflective of her judgment, and obviously who she picks for running mate will then debate J.D. Vance. TBD on the dates. There were some dates thrown out when she was the vice president and now when she was the running mate, and now that's changed. September 10th is still potentially the date where there might be a Trump versus Harris debate. And of course, just in terms of history, that is much more typical. Usually we see the debates after the conventions. The fact that we saw this debate in June was, of course, what the Biden world wanted. Pretty unprecedented.
10 seconds. Who's your VP pick? Who's the common sense pick for her?
I think Mark Kelly. I think Roy Cooper. I think Josh Shapiro. William McRaven was rumored for a very hot second. He's a general who obviously killed Osama bin Laden. That would have really shored up the ticket. But I think one of those gentlemen would do a nice job of balancing.
Would you leave Pimco if you were on the list?
No comment.
Libby Cantrill, thank you so much.
Thanks so much. Appreciate it.
Pacific Investment Management Company, and of course her really expertise on the halls of Congress and the policy of America. Red and green on the screen. The VIX, hey, 16, forget it. 18.66. The Sweeney yield, 4.36% and a solid 7 beeps. From New York City, Bloomberg Surveillance. Stay with us.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We have all red on the screen this morning. NASDAQ futures leading the losses, down 0.2%, 41 points. S&P futures down 0.1%, 8 points. Dow futures little change, down about 10 points. We have the 2-year yield at 4.36%, down 6 basis points. The yield on the 10-year, 4.22%, down 6 basis points. To currencies, the Japanese yen up nearly 1% now at 152.44 against the dollar. We have the euro stronger, British pound weaker, Bitcoin down more than 2% at about 64,000. To earnings we go, there's plenty of them. New York Community Bank Corp down more than 7% in its provision for credit losses, misses. Unilever, ADR's up 6%. You know, the company behind Hellmann's Mayo, Dove Soap. Well, it reported operating margin that surpassed expectations. Nestle, ADR's down nearly 0.5%. Cut its sales guidance. Consumers turning to cheaper food. But what consumers do love is that bang for the buck they're getting on their burritos. Chipotle up nearly 4%, reported earnings and comp sales topped estimates, saying that its bigger portion sizes could be driving sales. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. I appreciate it. Snuck up on us 2 big days of economic data. Paul, you're focused on PCE tomorrow, right?
Absolutely.
That's a Jerome Powell statistic.
Exactly. That's the one they like for inflation, so we'll keep an eye on that. Today we got GDP print, Tom. Looking for a little bit of improvement, maybe 2% for the second quarter versus 1.4% prior period.
And once again, folks, there's this zeitgeist of gloom out there, and people adjust, and they're doing it in real time with the Atlanta GDP. Jennifer Lee is expert at this, and not only has she adapted a second quarter view, but she's also adapting her present quarter ending September 30th with BMO Capital Markets, Jennifer Lee. Jennifer, why are we getting wrong a more enthusiastic American economy? Why have we edged to caution?
We've edged to caution. First of all, good morning, and thank you for having me on. We're edging to caution just because I think of all the political uncertainty that we've been talking about, endlessly, it seems like. But at the same time, we have to remember that the U.S. economy is still, even though things are slowing, and we're going to see proof of that. We have already been seeing proof of that. It's not slamming on the brakes. It's just a gradual slowdown, edging down. But for the second quarter, the numbers are going to be coming out in the next hour, and we're looking for about 1.9% and close to 2% GDP growth, which is a pickup from the first quarter. And still, this is still very impressive, just given everything that we have seen. All of the Fed tightenings we've seen.
Slice it domestic versus NX on the back end of the equation. Is domestic final sales agreeing with you on the enthusiasm that's out there for the next 3 months?
I think it is, because a lot of this growth has been driven by the American consumer, and this is something that we should never underestimate, as we say time and time again. And the U.S. consumer has, the latest retail sales numbers were surprisingly strong. There were upward revisions to the prior month, as long as, again, the labor market remains, strong or balanced, as Fed Chair Powell will say. We're still seeing, a lot of jobs out there, and the unemployment rate of 4.1%, although edging higher, is still extremely low. As long as we still have that sort of story narrative playing out, I think that's positive for the American consumer and overall positive for the U.S. economy.
So, Jennifer, tomorrow, as Tom mentioned, we're going to get the core PCE data. And again, it's something that the Fed certainly pays attention to. And I guess the consensus month on month is 0.2% for the core. Would that be a data point that would allow the Fed to proceed with a cut in September? Or is there anything out there that might push them to kind of jump and do something next week?
Ooh, that's interesting. I think I would fall off my chair. I think a lot of people would be if the Fed actually moved next week. We are very comfortable with our longstanding call of a September rate cut, which everyone is on board with now. But like tomorrow's figures, it's not just the income number. Actually, everything is important, but of course, wages and salaries, what people are spending on, especially if they're pulling back on those discretionary items. That's something that's people more cautious about. But Fed Chair Powell, just last week was saying that he's becoming increasingly confident, or comfortable with his view that inflation is heading back toward that 2% target on a sustained basis. And he did mention 3 positive, encouraging CPI reports in a row. I was personally calling it 2.5, but okay, we'll round it up to 3. So that's good news. And I think it would have to be something significant. It would have to be more than just one report that will get them to, get off of that narrative. But I think, we are well on track for a September rate cut. And I think the Jackson Hole confab will be very, very interesting this year, because everyone will be watching everything he, all of his actions, every single word every particular word they're going to be, dissecting it, just to, make sure that we are again on track for that September rate cut.
What do you make of the U.S. consumer here, Jennifer? We've seen some earnings just over the past couple of days from the airlines, from the auto companies that kind of go to the narrative that, the consumer on the margin is pulling back. How do you view the U.S. consumer?
The consumer has not been spending as much as they did, obviously post-pandemic. Everything is taken, relative to that point, I guess. But, they have been still spending, as we saw from the latest couple of months of retail sales. We'll see for tomorrow from the personal spending data, but I think they are starting to pull back a bit, but not completely. They're not slamming on the brakes just yet. So this is why, we still believe that the U.S. economy is still going to continue growing. And we haven't been saying the R word, the recession word, at all. Right. So I think this is, again, being driven by the U.S. consumer. And this is, again, a very much of a positive for the overall GDP figure.
Where's the split between business investment and residential investment? I really don't pay much attention to housing statistics, but there they are. Give us the dynamic now of those two parts of investment.
So the housing market has been suffering more because of its sensitivity to interest rates. And of course, there's also the lack of homes. The inventories are also lacking out there. So for the last, quite a few months, we've been seeing a lot more negative figures, or a lot of drops in the housing data, but we're seeing a little bit more of a pickup now. And of course, it was interesting that even though the home builders' confidence of home builders is still very weak. There's some spark that we're starting to see when you're talking to home builders about housing sales in the next 6 months or so. It's just the current environment, and still a lot less builder or home buyer traffic coming in. In terms of business investment, I think that's one of the components that's going to be supporting Q2 growth. But if you're looking at the surveys and what some of the businesses are saying out there, we're starting to see some cooling, I think, maybe some hesitation, I guess, in terms of future, in terms of investment, just because of the political uncertainty out there. And a few of the surveys, like the ISM, did mention, again, the political uncertainty, the political environment that's holding some businesses back.
So then the hysteria now of the market pulling back, futures -9, folks, the VIX 18.84. What I'm hearing, Jennifer Lee, is you're saying you don't see a recession, but are you still with solid GDP, or do we find that no man's land between 2% and an NBER recession?
Again, we were not looking for a recession, but we're looking for a 2.3% growth, which is still pretty decent, I think. Nothing to be, screaming from the rooftops over. But hey, 2% growth versus a lot slower growth we're seeing elsewhere, like in Europe, for example. I think it's still pretty impressive. Again, after 525 basis points of Fed rate hikes, this is like pretty darn impressive overall, and I think this is overall a good story, I think, for the U.S. economy.
Killer brief. Jennifer Lee, thank you so much. BMO Capital Markets. She's got to put up with Ian Lingot and Brian Bell's. Sure. I mean, it's like the worst job on Wall Street. Jennifer Lee, thank you so much. There's a poll, Paul. Did you see that from Richard?
Yes, I did.
Vice President Harris trails former President Trump in 4 swing states.
Yep.
Ties in Wisconsin.
Okay.
Good Morning Madison.
Yep.
The Emerson poll.
Emerson poll, that's a good one.
So what do we have, 20 polls in the next 18 days?
Exactly.
You're going to be polled out.
Yeah, exactly. We've got a few months, so we'll see how this plays out, but it looks like, both campaigns are just kind of gearing up for this final push here.
We got to get to the news quickly here because we got to talk Mets, Yankees, and 20 runs against the Red Sox. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Joe Biden framed his decision to drop out of the 2024 race as a bid to unify the nation under a new generation of leaders.
America's going to have to choose between moving forward or backward, between hope and hate, between unity and division.
It was Biden's first speech since ending his re-election campaign and political career. We get more with Bloomberg's Bill Ferries.
President Biden seemed to be making kind of 2 key points. One was his argument that stepping aside allows the Democratic Party to unite behind Kamala Harris, gives them a strong ticket to go forward. And challenge Trump and fight for democracy. And then he also made a clear pitch for really his legacy and his place in history.
Bloomberg's Bill Ferries. At his first campaign rally since President Biden's exit from the race, former President Trump turned his attention to the presumptive Democratic presidential nominee, Vice President Harris. Trump, speaking at the Bojangles Coliseum in Charlotte, North Carolina, slammed Harris and Biden.
This November, the American people are going to tell her, no thanks, Kamala. You've done a terrible job. You've been terrible at everything you've done. You're ultra-liberal, and we don't want you here. We don't want you anywhere. Kamala, you're fired. Get out of here. You're fired.
Harris, meanwhile, will campaign today in Houston, speaking before the American Teachers Federation. Israeli Prime Minister Benjamin Netanyahu will meet with President Biden and Vice President Harris in Washington today. Yesterday, Netanyahu spoke before a joint session of Congress. Netanyahu thanked the U.S. for its assistance in fighting against Hamas and says Israeli forces won't rest until the terror network is defeated.
Never again must never be an empty promise. It must always remain a sacred vow. And after October 7th, never again is now.
Meanwhile, a demonstration of thousands gathered in Washington to protest Israeli Prime Minister Netanyahu's address to Congress. American flags were taken down and replaced with Palestinian flags. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
In the NFL, there was parity. There would be always one wacko team like the Detroit Lions, 14-0, whatever. But there's only 2 teams in baseball now in the end of July playing .600 ball. I mean, everything's balanced out, including the Mets beating the Yankees like 14 times in a row or whatever.
Exactly. Mets are back in it now. I mean,
they are 53 and 48.
How about that?
Yeah, and I tell you what, I mean they look pretty good, and all 4 games between the Mets and the Yankees. Here comes the broom. Sweep, sweep, sweep.
Do you look at the wild card this early? I try not to because it's silly.
Well, I try not to, but because we still have at least a good 2 months left before we even get into that conversation. But you can't help but not to look at it. I mean, because the Mets are playing decent ball, and I'm just wondering what just happened to the Yankees. By the way, it was 12-3. Was the score yesterday.
But what was it? John Stashire was out with somebody was out with that stat, 11 and 23 in the last 30
Yeah,
games.
I mean, it has been a clobbering.
That's a tough month and a half there.
And speaking of a what for and a why whipping, the poor Red Sox, and they're not playing bad ball either at 54 and 47. They got, snot clobbered by the Colorado Rockies, 27.
Yeah.
Out in Denver. That happens.
The atmosphere is different.
It
happens out there.
Yeah, but they're 38 and 65.
Yes.
Sorry.
We're booking now around Mets people. We try to get as many Mets fans as we can as guests, and they're all enthused. But I'm absolutely baffled about the normal cadence of the trade deadline. I have no idea what people do now in this parity that we have.
Well, I think the big thing for the Mets is they were going to potentially be sellers, including Pete Alonso. But now,
I don't know.
I'll hold this team together and see if they can make a run here.
I think you got to ride it.
Can we have a moment of silence? I mean, they're below the Mendoza line. The White Sox are 0-10.
Ooh, yeah.
Yep.
I mean, there's a franchise that needs to be done better.
Yeah, exactly. It's Chicago. Come on now.
It's
a great town.
I agree.
We'll see. I'm watching the Astros. I think they're going to have a heck of an August. They're going to come on and be fun, be part of it. So I'm watching the Pirates as well. Pirates are fun. They got that pitcher. That's your baseball.
So you're off the Padres? That was last year?
No, I'm doing the Padres.
Okay.
Watched last night.
All right.
Nathan Hager emailed me. He said, watch the Padres. It was a click. The pitcher for the Nationals looked like the guy in Bull Durham. Bloomberg's surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures are falling this morning. NASDAQ futures down about 0.1%, 26 points. We have Dow futures down 8 points. S&P futures down about 5 points. The two-year yield at 4.36%. That's down 6 basis points. The yield on the 10-year, 4.22%, and that's down 6 basis points. We have spot gold lower, 2,370 an ounce. Brent crude, $80 a barrel. WTI crude, $76 a barrel. To earnings we go. Honeywell down 4%, cut its adjusted earnings per share forecast for the full year. Also gave profit guidance for the third quarter that was below expectations. Then you have Whirlpool cutting its full year forecast. Consumers avoiding those big ticket appliances, but shares rebounding now up about 3%. And finally, Royal Caribbean. Second quarter profit beat expectation. It raised its full year outlook. But the problem is that passenger cruise days missed. So now their shares down more than 1%. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thanks so much. We're going to get the newspapers. But first, Paul, I think we got to triangulate the angst in the market. I walked in and I looked at West Texas Intermediate, 76 handle. The real yield really hasn't moved. It hasn't given me the global slowdown angst. But nominal yields have 10-year in 6 weeks, 4.22%. And the dollar, the yen rally, that kind of thing, stronger yen. What do you see within the global angst right now in the market?
I think what we saw in the trading yesterday, Tom, particularly with the NASDAQ, is here people kind of take it in some of the earnings we've seen and on some of the tech names that have to lead this market. A little bit of disappointment on the margins for some of those names.
Tesla, but I'm not in the camp Tesla.
I agree.
You and I don't agree on this. Tesla, come on.
Exactly. What
it's
is
not
Tesla?
A tech company.
Is it a car company? Is it an AI company? Maybe it's a robot company, Tom. That'd be good for you. How about that? You can get your own robot.
The Bentley's in the garage.
Okay.
And my driver today said he can't believe how many times he gets the email in for they want a car, but they say don't send a Tesla.
Really?
He says a lot.
Okay. All right.
It's not infrequent.
My driver yesterday, he took me home, but he got to my door. He had 2% left. I have no idea what he was going to do, how he was going to get back home.
Yeah, that's like that's a serious problem.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Out on YouTube, the most important project of the day, the Lisa Mateo Hour, the front pages. Brought to you by Interactive Brokers. Discover the future of trading with their next generation trading platform, IBKR Desktop. Download IBKR Desktop is ibkr.com/desktop. My agent just called in, Lisa, and said I have to sit up straight. So I'm sitting up straight for the Lisa Mateo Hour. What do you got?
Thank you. Oh, and by the way, a quick shout out. I forgot to mention yesterday in the live chat, I think it was Tom or Tim, said the newspaper segment needs to go an hour.
Oh, I'm with him. Get that sponsored.
I missed that.
Yeah.
Skimmed over that one. We're starting with the Paris Olympics, all right? It's barely begun. You had a few soccer games started, okay? But there's already a cheating scandal that started with the Olympics, okay? This is for women's soccer. This is from the Washington Post. They say that Bev Priestman, she will not coach Canada in its Olympic women's soccer game against New Zealand today. The reason why is because members of her staff, they flew drones over New Zealand's practices on Friday and Monday. I guess they were trying to get a little inside peek as to what they were doing. But she put out a statement. The coach said that she is responsible for the conduct. She said she decided to voluntarily withdraw from coaching. She apologized to the players of New Zealand and Team Canada, but she said she didn't know that the recordings were being taken. So
I'm as not into this as anybody can be. And I'm fascinated to see the opening ceremonies because they're going down the river.
I know.
Or up the river. I don't know which. But I can't imagine, by the Pont Neuf and the rebuilding of Notre Dame to see however they're going to do. What are they going to be in the party boats? Sweeney, when Sweeney goes over, he's on the dinner boat. He gets tickets. I can't get tickets in Paris, but
that'll be interesting. It'll be fun. spectacular TV, I think.
Tomorrow we get that. Lisa, what's next?
Okay.
Big news.
Oh, this is big news. Real life succession playing out for the Murdoch family, okay? So the New York Times, they got their hands on a court document. It showed that Rupert Murdoch, in this legal battle with his 3 children, he's looking to change the family's trust to hand control of the media empire only to his oldest son, Lachlan, instead of all 4 kids.
Yep.
So the Times are saying it caught his kids, James, Elizabeth, Prudence, by surprise. Now they want to challenge the action.
This is
in
Succession.
Court. I mean, it's playing out in real life.
Paul, can you run an enterprise like that by committee?
No, but that's certainly what Rupert did at the beginning was says, I'm going to set up, they're all equal.
Correct.
After I die, they figure it out. But now what he's saying is, my 3 of my offspring, they don't necessarily share the editorial view that I and my son Lachlan share for Fox in particular.
Yeah, but the way
and
I
so
read
we
it,
need to get ahead of that before anything happens.
He's not taking equity from him. It's just who's going to run it.
Who's going to run
exactly.
it?
Okay.
Yeah. And that is going to be, I mean, you could
one
have
of
an
them
HBO
takes-
series about this, maybe call it, I don't know, Succession?
That would be
and
good.
that would be a good story. You could do that.
The idea generation off the Sweeney desk is just extraordinary. Next.
Okay, you know how parents go back and forth with their kids about the screen time, right? Well, this is becoming, I know you're going to laugh at this, it's becoming a thing in zoos with zookeepers and gorillas. Okay, the gorillas are getting too much screen time.
Who gives them the screen time and what screens do they
Here's
get?
the thing. Okay, so sometimes the zookeepers do it. They show them their phone and they're amazed because the gorillas actually go on and they're cognizant of it. They like to watch the videos of themselves and other gorillas, and they go like this to the screen. If you're on YouTube, you're watching me swipe on the screen. They like to swipe and say, "Okay, next video." So they're getting attached to it. But the visitors to the zoo are also holding up their phones to attract the gorillas because the gorillas like the videos. So the zoos are going back and forth about this. It's this big battle, whether they should allow it, whether they should not, how much screen time they should have, how much screen time they should not have. I never thought I would be talking about this, but it's become an issue.
It's a thing.
This was in the Wall Street Journal, so it's becoming a problem in the zoos.
I think you got to limit the screen time for the gorillas, no question. I'll
Can
be in
I
charge
do
of
my annual
that.
shout out to late Julian Robertson and his wife. They ponied up millions so we could do tigers at the Bronx Zoo like nothing. And you go up there, it's immaculate, and I guess it looks a little bit like Africa. I don't know, but the Robertsons really donated an immense amount to trying to make a zoo better than a piece of concrete.
Yeah.
And they really did a great job.
Awesome.
What do we
That's
got
awesome.
next?
It has. Okay, Tom, I know you're a big fan of your chair. Like the office chair has to be like set and perfect and great. Couch demand, office chairs, they're on the rebound now. You have furniture maker Miller Knoll. They're saying they were in this 2-year rut, but now they're seeing corporate clients, global retail orders starting to grow. People are coming back to the office. That's what they're saying. So now they need the more office chairs. But it's beyond this. They're also saying for healthcare facilities, lobby, in-room patient seating, they need more chairs and more people coming into the doctor's office. They're also rethinking, instead of regular tables and chairs, sofas, coffee tables, office furniture,
See,
lounge
I had all of that
chairs.
at Credit Suisse in
That's
my
what
office.
they're
I had
getting. You had the lounge
sofa,
chairs,
the conference table. Then my kids came to my oldest kids came to my Bloomberg desk and they say, "Dad, what happened?" So they do a little bit differently here at Bloomberg.
So that's kind of the
good to
switch
know.
that they're making. People, they want people to feel better when they come back to the office, so they're doing lounge areas within the office.
It's a huge deal because, frankly, most of that stuff, particularly the European stuff, doesn't fit me. I was in Davos. They put me in a lovely, lovely, fancy condo way above my pay grade, and I sat down in a chair and broke it.
No.
I just, what else can I say?
I'm kidding.
And I wish they designed things for American size.
Oh.
There's a very few. There's one in the recording industry that everybody's the standard chair.
Well,
And
you're
it's
a bit
outrageous.
taller than American
Yeah.
size.
There's that. We got one more?
No, we're good. We're good.
That's it? Lisa Mateo,
Yes.
the newspapers. Thank you as well. Look, you look, Paul, at this market. It's GDP. I mean, in 30 minutes, we're going to get it here. It's going to be a big deal.
Jennifer Lee at BMO said, it's solid growth. I mean, particularly in the context of, all the rate hikes we've had.
I put out on Twitter, and I don't think I've done it on LinkedIn yet, Eric Clapton yesterday did a spectacular video of the late John Mayall and what he meant for him. Clapton at the bottom said, I need a hit. He went to Los Angeles with Lenny Waronker. Eric Clapton, forever, man.
How many bridges I've got to cross? How many times must I sweat myself? Or I can talk to the boss. Or I can talk to the boss.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr, Lisa Mateo. Paul Sweeney loaded the boat on Google at 55.
Oh, boy. Here we
Do you
go.
really care about a little bit of a pullback after loading it at 55, a triple?
I don't think so. I mean, I think they're as well positioned for this AI trade, whatever it
It's
may
a drawdown.
be. It's a drawdown. Yeah, exactly.
It's a correction.
I think they'll figure it out.
We're going to talk about that in this hour. We're going to go through quickly here. Anastasia Amoroso with us, her magnificent call of optimism on the market. We'll see how she adjusts to the drawdown now. VIX 12 out to 18.82. World coming to an end. We're on YouTube. Go out to YouTube. You go YouTube Bloomberg Podcast. You subscribe to Bloomberg Podcast. I need you to subscribe to Bloomberg Podcast. I got a new Chewy order for vet bill and kennel fees. So subscribe to Bloomberg Podcast. We're out there with a live chat, always interesting. They were just talking BitDog.
Were they?
Yeah, on the
All
live
right.
chat.
Well, we'll let Matt. We'll
They
check
all
with
own
Matt Miller.
Bitcoin, and you know they hang on.
Down another 3% today.
Every
Tom.
word Matt Miller says, they hang on.
Yeah.
On live chat, and then we're on Android Auto and Apple CarPlay as well. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo.
You got it. Futures falling after a big tech sell-off hit the Nasdaq with the worst day since 2022. Nasdaq futures down 0.3%, 56 points. We have Dow futures little change, down 13 points. S&P futures down 0.2%, or 11 points. We have the 2-year yield at 4.37%, down 5 basis points. The yield on the 10-year 4.22%, and that's down 6 basis points. We're less than half an hour away from the government's report on second quarter economic growth. Also on the agenda, we have jobless claims for last week, durable goods orders on top of that. To earnings we go. We'll start with tech. IBM up 3%, reported a jump in bookings for its AI business, also better than expected revenue. We go to airlines. American Airlines down 7% now, slashed its earnings outlook for the quarter and the full year. Fare discounts, high costs that really squeezed its earnings. And we have Southwest Airlines down 5%, reported second quarter adjusted EPS that beat estimates. But the real big story here is that the company is getting rid of its open seating policy. Caused a lot of issues. We'll see how people react to this. One thing that they are sticking to, bags will continue to fly free. That is your Bloomberg Business Flash. Tom and Paul.
Lisa, thanks so much. Stuart Kaiser coming up later. The tandem of Kaiser and Amoroso really quite good here on the angst of the equity market. Let me frame it out with Google just because they've reported here. Anastasia Amoroso, I call it the Yardeni Ancampora bottom, but also Amoroso of ICAP there as well. October of 2022, October of 2023, shut up and own it. Don't worry about the angst. Google up 100% plus, down 10% from the 193 peak. Anastasia, I did a fancy semi-log exponential moving average study, and I'm not breaking a sweat until we go 170 down to 160. How do you handle a drawdown like this?
Well, first of all, you expected, and it should have been expected. And, we wrote a piece at the tail end of June where we looked at the potential risks into the second half of the year. And the familiar things amongst that list, of course, the upcoming election volatility, the slowdown in the consumer. But one of them was actually the potential for AI disappointment. And so when you look at the reporting season so far, I'm not really all that surprised to see the fact that Google did not live up to lofty expectations, or they did so less than they would have done in prior quarters.
How did we get from John Templeton in my youth, where this was measured, intelligent, and opportunity to do something, to the total media panic we're in right now, going down, what, Paul, 8% blended NDX?
Yep.
How do we get from a quiescent time onto this madness? Is it Anastasia Amoroso's fault?
Well, I think you have to acknowledge the slight change in trend, and the drumbeat on artificial intelligence has been, we're going to invest, we're going to invest, and we're going to invest. But at some point, the question has to be asked, when is it going to get monetized? And Tom, that question has been asked a lot in the last month or two. And so this was the quarter where I think investors are looking for answers from the likes of Google and Meta and others, that when are they going to monetize the AI investments that they've been making. And the truth is they're likely not going to do so in the next quarter or maybe the next year. But what they are telling investors, they're going to continue to spend on CapEx. So that's what's giving investors a lot of unease here. And I think this sets up the tech trade such that you probably want to continue to stick with semiconductors because they're the ultimate beneficiaries of this CapEx. But you might put a question mark around some of the communication services who have been the drivers of some of the biggest earnings surprises. But if the driver now was supposed to be Gen AI, maybe it's not here just yet.
It feels like, and I'm sure the data probably backs it up, but it feels like really for the past 18 months, maybe 2 years, it's been an AI-driven market, not just a tech sector, but a market. So what's the market risk if some of this AI fatigue sets in, or maybe, this AI trade fades a little bit? Is that a real concern for the market?
Well, so there's a couple of things I'd say about that. First of all, next week is absolutely pivotal. It is critical, is going to determine the direction of the market over the next, I would say, couple of months. If the rest of the Mag 7 complex does actually deliver, then maybe we don't need to worry about the slowdown and some of those earnings surprises. But if it doesn't, then I think it does lead to further lowering of expectations. And this is, by the way, good news, further lowering of valuations. So I think if that happens, then you have a cleaner slate. So that's the first thing I wanted to say about next week. But the broader point is this rotation trade. I call it the great rotation. I think it's firmly in place. Right now, investors are going to focus on the next best thing, which is the Fed rate cut. And how do you position for the rate cut? You position it in rate cut beneficiaries, such as small caps, such as regional banks. And by the way, defensives actually tend to outperform after the first rate cut. So that's why we've been recommending, Tom, this new barbell of not tech and money markets, but defensives like utilities and regional banks.
But are Apple and Microsoft, with those cash hoards and durable free cash flow, are they defensives where if Jerome Powell brings the yield structure in, they prosper on a duration basis?
Yes, they can prosper on the duration basis. However, their valuations are already pretty extended. So how much more benefit are they likely to get from the rate cuts? And if you look at the net debt to EBITDA, if you look at the debt levels for these companies, they're virtually non-existent. That's why they've been the defense trade in a high for longer rate environment.
You went there. If yields come down, do we see a CFO frenzy of debt issuance?
Yes, and you've been seeing this already. Issuance in investment grade and high yield has been very robust this year. But Tom, this is one of the reasons why I like small caps and I like regional banks, because it's not just a sentiment lift from, the Fed is going to cut rates, but it's actually fundamental lift. Look at, for example, the 6-month SOFR, off of which a lot of these floating rates are based. Well, that's already down because of the futures curve pricing in the Fed rate cuts. So if you are a small company that has a floating rate loan, you're likely starting to see the adjustments lower in the expenses that you pay on your leverage. So there is more to that trade, and that's why I think this is not just a sentiment-driven rotation trade. There's more to it.
You mentioned regional banks. A lot of concern out there about commercial real estate, and that maybe the exposure will be most acutely felt at the regional bank level. How do you think about that?
Well, it's all about what's priced in, what's in the price, and where do you go from here. And when I look at commercial real estate prices, they have corrected a 1.16% from their 2022 peak. They've come in some. If you look at the dispersion, of course, office was hit the most. But you know what's interesting, Paul, is that if you look at year-over-year change in commercial real estate prices, we saw an inflection point at some point earlier this year, and they're starting to inflect incrementally higher. Because outside of office, there's actually not a whole lot of things that is wrong with commercial real estate. You look at vacancy rates, they're quite low across the industrial complex, the apartment complex. So the fundamentals are strong, but if you get this boost of rate cuts, that's what a lot of our managers have been saying they're waiting for as a support for CRE valuations. So if that happens, that's one more reason to actually like regional banks.
Anastasia Amoroso, thank you so much, is with ICAP, really nuanced discussions there. We'll feature her on Single Best Idea today. Our Single Best News Report with our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. President Joe Biden, in his first speech since ending his re-election campaign and political career, said the best way forward is to pass the torch to a new generation.
My fellow Americans, it's been the privilege of my life to serve this nation for over 50 years.
Meanwhile, former RNC Chair Reince Priebus says he did not hear any real explanation from the president.
Why did he decide to step down? And it's very clear. We all know the answer. The answer he decided to step down was that this was a political decision.
Priebus spoke to ABC. Yesterday, former President Trump campaigned in Charlotte, North Carolina. Trump turned his attention to slamming the presumptive Democratic presidential nominee, Vice President Kamala Harris. The former president says the attempt on his life had not changed him.
If you don't mind, I'm not going to be nice. Is that okay?
Meanwhile, a new Emerson poll in 5 swing states finds Harris trailing Trump in 4 states and tied in Wisconsin. Both campaigns are scheduled to meet with Benjamin Netanyahu. The Israeli prime minister will meet with Biden and Harris today at the White House and with Trump in Florida tomorrow. Yesterday, in an hour-long speech to Congress, Netanyahu tried to shore up U.S. support for Israel's war with Hamas. Bloomberg's Amy Morris reports from Washington.
Netanyahu said Iran regards Israel as an arm of its primary enemy, the United States.
Our enemies are your enemies. Our fight is your fight, and our victory will be your victory.
Netanyahu also said that he envisions a new alliance throughout the Middle East, including any countries at peace with Israel.
The new alliance I envision would be a natural extension of the groundbreaking Abraham Accords. Those accords saw peace forged between Israel and 4 Arab countries, and they were supported by Republicans and Democrats alike. I think we should call it the Abraham Alliance.
Netanyahu also assailed anti-Israel protesters for siding with Hamas. In Washington, Amy Morris, Bloomberg Radio.
Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. I'm dead pulled out. I mean, I'm waiting for Mr. Jackman to call me so he can come in and tell us about this.
Okay.
I just got this wrong. It's a big movie season. I look at Box Office Mojo, and, it takes 18 years, I think, or 28, whatever the number is, to do a sequel of Twister. Let's add an S.
Yes.
Twisters. This thing, I don't know any of the actors. It's, Michael Crichton, I get it.
Yep.
But it's like minting money.
I know. Go figure. I mean, I thought the first one was okay. I probably wouldn't have picked
the first one.
Yeah, I liked it. But I probably wouldn't have been my choice to hey, we need to have a reboot. This is not Top Gun kind of thing. But, it's doing well. So.
But the new guy, the main actor, I forgot his name.
But I see him everywhere now.
He's like the hottest thing.
Yep.
Very good
He's on
looking
the
man.
edge of
I
rock.
have to say.
Okay,
He's no Rock, but I mean.
I got a budget for this thing of $155 million, which I can't believe. That's like a ginormous number to me. And it's recouped all that in like 2 cups of Senka.
Yeah, exactly.
And
this was a surprise, I think, for Hollywood.
Is this like foreign? Like, does it get huge foreign?
It will. It will. I
viewership?
think it will. The thing which I don't know is where's the Chinese market these days? Because it was such a growth story for Hollywood for the last 20 years, and then you just wonder with some of these tensions. I don't think it's as big a market as it used to be. But this will play globally, and nothing gets $150 million okay. Unless it's going to do well globally.
Yeah, and Inside Out 2, that also topped for the animation, topping Frozen.
Yep.
I think Frozen 2, so that's doing well.
It's like Field of Dreams.
Yeah.
If you feel it, chase it. That's
Twisters
a slogan from
with an S.
Twisters.
Okay.
If you feel it, chase it. Have you ever seen a tornado?
Not a big one. I've seen some little ones.
I saw one from a distance. I was scared stiff. I was absolutely scared stiff.
Some of those you
to
see
the
in the
Midwest.
are
Be
brutal.
careful out there. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures still in the red. Right now, NASDAQ futures down 0.3%, 59 points. We have S&P futures down 0.2%, 12 points. Dow futures, little change, down about 10 points. We have the 2-year yield at 4.38%. That's down 5 basis points. The yield on the 10-year, 4.21%, and that's down 7 basis points. To currencies we go. We have the dollar weaker, Japanese yen stronger, nearly 1% at 152.65 against the dollar. The euro stronger, British pound weaker, Bitcoin down just about 3% at 64,000. To earnings we go. AbbVie lifted its 2024 profit projection. New drugs starting to offset that Humira decline. Then you have toy maker Hasbro boosted its adjusted EBITDA forecast for the year. Second quarter results beat expectations. And then shares of the world's biggest record label down 20% in Amsterdam. We're talking about Universal Music Group. Artists like Taylor Swift, Drake, reported subscription streaming revenue that disappointed. That's your Bloomberg Business Flash.
I'm glad you mentioned that. I don't get the business. I mean, remember, it's like the water cooler thing, Paul, you're talking about.
Yep.
You used to have the Billboard 100. You'd stand around and go, OMG, Taylor Swift's #1, whatever. Yep. And it seems like it's all gone.
Well, it's all this, as Lisa mentioned, the streaming. It's how many downloads and streams and all that kind of stuff. And the good news is they're getting paid for it thanks to the Spotify's. Now, are the artists getting paid what they maybe think they deserve? That's a whole nother discussion. But there is a viable revenue stream there that saved the music industry, in my opinion.
Yeah, no question about
Starting
that.
2016.
I mean, somebody gave us a CD the other day. We have no place in the house, no place in the house to play a CD.
No, but vinyl is making comeback.
Oh, vinyl's very big. The kids.
Yeah, the kids.
They're like, pick me. I'm looking at vinyl, out there. Why am I reduxing this?
Yeah.
What's the first vinyl record you'd buy?
Well, the first one I bought was Born to Run. Back in the day, 75.
I would buy The Doors, L.A. Woman.
Oh, okay.
Wendy Schiller's joining us now from Brown University. Don't tell me Duke Robillard. Wendy Schiller, what would be the first vinyl record you would buy?
Led Zeppelin.
Oh, there you go.
We got to do a tandem. We got to get Wendy Schiller and Liz Ann Saunders together to talk about Mr. Plant and Company. Wendy Schiller joins us now from Brown on our political festivities. Wendy, I'm fascinated about the whenness of a VP pick. Strategically, what should Vice President Harris do to mint a vice president nominee?
Well, I mean, I still think she should wait at least 2 weeks. I think she should wait till she's virtually nominated, in my opinion, to solidify her connection to the Democratic Party base. It's been extraordinary, as we've talked about before, the way the Democrats have coalesced around her, but she's still got some work to do, particularly with Democratic Party chairs in swing states, for example. Just solidify that she's the top of the ticket. She's sort of a little bit squeezed by Biden's farewell and the speculation on the VP. It takes away the opportunity to sort of say, here, America, this is who I am and what kind of president I would be.
My mother lived in Minneapolis for a cup of coffee. She saw Frank Sinatra on his first tour in Minneapolis. This is a few years ago. And Wendy, I had a flashback with Governor Tim Walz of Minnesota, who's a really interesting centrist guy, because he's not in the Democratic Party. He's in the Democratic Farmer, Labor, Hubert Humphrey, Walter Mondale Party. Is that where Vice President Harris has to go? Does she have to go to traditional centrist Midwest Democrats?
Well, Tom, they were good VPs, but not so good top of the ticket candidates, Humphrey and Mondale. So Minnesota, sort of leans Democratic, but it's swingy, right? It's not entirely blue at all. So it would be a smart strategic choice. I think it's really between Andy Beshear and Tim Walz if you're looking for that centrist that can really resonate with people in areas that you may not, or the Democrats may not have done so well in recent past. So those are those two contenders. The big question is, do you take Josh Shapiro out of Pennsylvania? He's got a pretty good machine he's building up there. It's very popular. If you take him, does he deliver Pennsylvania? There's a Senate race there this year. Or does the Democratic Party still need him to stay in Pennsylvania? Same with Mark Kelly in Arizona. Tough Senate seat to retain. So you have a Democratic governor, but nonetheless, Arizona's tough. So that really sort of talks to the Senate balance rather than whether the VP president combination will do well.
Immigration, Wendy, it's obviously a big issue for all Americans. It's a big issue for the Republican and their campaign. VP Harris potentially very vulnerable on this issue, given that one of her remits at the beginning of the administration was to address the southern border. How should she respond here?
Well, President Biden put in place an executive order that has pretty much closed or really limited asylum seekers at the border, and that has really stopped a lot of the flow. But, there was a lot of flow before that. So the issue is what's happening in September when we have the debate, presumably, between Donald Trump and Kamala Harris. What does America see in September? Do interest rates come down just a little bit? Are the migrant situations, is that ebbing at the border? Because remember, it's still summer. Voters are paying quite a bit of attention, but not completely deciding, those that are not decided yet. So it really depends on what those conditions are in September. And she can make the case, well, there was a policy. We changed the policy. I'll continue this policy, and it'll get under control.
Lisa Mattea is out of control. She came in this morning storming about the comments of the vice president and the former president. Lisa, a question for Professor Schiller, please.
Yes, Professor Schiller, wanted to ask, we've been hearing so much about Obama possibly backing Harris soon. What's been holding him back? I mean, is this a campaign strategy? Is there something more to this?
Lisa, that's a great question. I was speculating earlier in the week that it was sort of designed to give the voices in the party a chance to weigh in on Harris, maybe weigh in on the VP, make people feel included. But it really looks like the grassroots of the party is all in on Kamala Harris. We've seen, a pretty amazing result just in the suburbs of Milwaukee the other day. So, I mean, when you think about that, now you're sort of saying, is this like Hamlet, or Macbeth? Like, what's going on?
Oh, listen.
Standing around in your living room thinking, should I not? Get with the times and get with the party. So it seems just out of step to me. Clearly, he'll get out on the campaign trail for Kamala Harris when the time comes. But maybe he feels like, it wouldn't be beneficial to her right now. I'm not so sure that's a great, perception of the reality of what's going on.
Paul, has Professor Schiller ever told you that was a great question? She's never told me that once.
No.
Lisa, please, again.
I had to ask about that. And also, what else are your concerns about going forward? As far as, there was this cry for unity in the beginning. And now we're starting to see that difference. I mean, with the two campaigns that were out yesterday between Harris and between Trump, you see them kind of this bickering back and forth. Is the unity, is that a thing of the past right now?
Well, I mean, I feel like for Harris, she gave virtually the same speech on Sunday and then continuously Monday, Tuesday. If she stays on script, I think she lets the party coalesce around her and the grassroots party get out the vote, get their organization, which is in better shape than the Republican organization on the ground, get them to lift her up. The question is, does she, as just like Trump, stay on script? And that is the big question mark. She wasn't successful in 2020 in this way. And the question is, has she changed enough to make it work this time?
I mean, I think, Professor, you're maybe too young for this, but July 1973, Madison Square Garden, the Led Zeppelin.
Nice.
Yeah, I wasn't there, but I had older brothers and sisters who completely curated my musical taste in the 1970s. So.
I was 9.
It's very cool. Wendy Schiller, thank you so much. We got to put, we play Led Zeppelin for Led Zeppelin people.
Yep.
It was a miracle. I had the clearest memory of 1969, I believe it was. And we just stared at this album that was just shockingly different than anything. With John Mayall dying here at 90, even more trenchant as well. Wendy Schiller, hugely valuable to the show. She gets a huge feedback, pro and con, and all that. As well, Lisa, thank you for having the best question to Professor Schiller since Nixon was president. Greatly appreciate that. Good morning on YouTube. Good morning to Brown University and Wendy Schiller as well. 1973, Led Zeppelin, Madison Square Garden. Black Dog, good morning.
I
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. A wave of earnings misses, worries about U.S. economic growth really driving losses on Wall Street this morning. NASDAQ futures down 0.3%, 74 points. We have S&P futures down 0.2%, 13 points. Dow futures, little change, down about 9 points. We have the 2-year yield at 4.36%, down 6 basis points. The 10-year yield, 4.2%, and that's down 6 basis points. Commodities, we have spot gold lower, 2,370 an ounce. Brent crude, $80 a barrel. WTI crude, $76 a barrel. Shares of Stellantis lower, down 8%. The company's thinking about price cuts, bringing back older models. Get this, including the Dodge Charger. It wants to deal with a massive drop in sales during that first half of the year. Ford down 12%. Quality problems with its vehicles led to this surge in warranty costs. Then you have Nissan slashed its earnings outlook, citing weak sales in Japan and the U.S. Those shares down 6% in Japan. And from cars to motorcycles, Harley-Davidson, ticker HOG. Love that. Second quarter revenue beat estimates. That was thanks to better sales on pricier bikes, but shares down 1%. Retail motorcycle revenue fell in North America, and that's Harley's core market.
Lisa, did I tell you about a Vespa?
You
I'm
did.
Not a Vespa
it's not
rider?
a Harley.
Oh, okay. It's not the same thing.
It's not. It's not as hardcore as the Harley.
Okay.
But I'll give it to you. There you go. That is your Bloomberg Business Flash, Tom and Paul.
Thanks so much, Lisa. I want to go back to the pandemic, where it was lots of things and giggles. You know, we're all at home. It's hugely stressful. The staff was great. And this is like the world's going to come to an end. Somewhere out there, there's a slowdown. We just learned that there's not a slowdown. The first look at GDP is nowhere near the even enthusiasm of Atlanta GDP now.
Wow, sir.
1.4% for the previous quarter ending March 31. And we had a lot of gloom out there, 1.x%. Major shout out to Citigroup, who said no. And then the surveys come up to 2%. Your first statistic for GDP is 2.8%. And if I take the GDP price index and just add it to it, which is bad theory, bad math, but come on, it's radio and YouTube, that's a 5.1% nominal GDP, which is how you get to Dow 40,000. We've seen a lift in the market, red and green still on the screen. We'll have to see where the VIX comes in as well. On a yield basis, not all that much movement here. I think people are mostly in shock. The 10-year real yield critically is a higher statistic from 1.94 to 1.97. Our economic indicators today and tomorrow with PCE, brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. We have the right guy at the right time on a 5% nominal GDP ending June 30 coming. Stuart Kaiser, I got goosebumps right now how you were out 2 years ago saying it will be okay. And as I've always said, corporations will adjust. In your mind, away from Andrew Hollenhorst and Victoria Clark, are you modeling a slowdown?
We're a little more worried about it than we have been probably in the last 18 months, I would say. Veronica and Andrew definitely have a recession kind of later this year. We have seen some, I think, shots across the bow in the weak data perspective. But as you mentioned, GDP strong this morning. Claims are up to 238,000. So, in our view, the macro backdrop is positive for equities. You've got solid jobs growth. You've got inflation easing and below consensus. You've got a Fed that wants to cut. So that to us says you want to keep running long equity risk.
Gina Martin Adams parses down the income statement. She sees solidity. She's worried about revenue shortfall. If I have a 5% Q2 nominal GDP, how do I have a revenue shortfall?
Probably unlikely. I think that the biggest risk in the back half to me would be, even though 5% sounds high from a nominal perspective, compared to what we had a year or two ago, that nominal number is lower. And I think the question is, in a slowing nominal environment, do we see downward pressure on margins? But look, big picture, I think the earnings outlook looks pretty strong. 12-month forward EPS is like $260, which is a very big number. So look, I think the earnings outlook is still pretty solid. The challenge is that the expectations around that earnings outlook are quite high. And if you look at this quarter to date, 46% of companies have traded up on earnings. Historically, that's like 52. So less than half of companies are trading higher on their earnings prints, I think, which tells you how high the bar is this quarter.
Tom Stewart's got this great stat here. I'm just looking at it. SPX yesterday had its first 2% down day in 365 trading days. So, I mean, that goes to the strength and consistency of this market here, which I guess is even more amazing in the context of the Fed's been raising rates. It's just what happens when the Fed starts really cutting rates?
Yeah, it's been really impressive, Paul. I think part of that is just the fact that you sort of clip the tail off inflation, which helps. A lot of people are blaming vol selling and sort of all these systematic strategies that are fundamentally supporting the market, and I think that's probably partially the case. There's a flip side to that coin, though, right? Coming out of yesterday, the size move we saw in the S&P means like volatility target funds are going to sell about $75 billion of equity over the course of the next couple of days. So the question is, yes, we've had a very low volatility rally. Now that we've broken out of that range, the test is going to be, have we broken out of the range, and do we end up a little bit untethered, or do we get a strong GDP number and we solidify ourselves?
How long does it take for these sophisticated institutional strategies to activate, and then they clear the market and the market's left to itself? Is it hours? Is it days? Is it, when they bring out Twister 3? When is it?
I think it's more in the days category, Tom. The vol target funds, for instance, do it over a kind of a T+2 basis. The CTAs are doing it sort of in real time, but they're obviously responsive to each day, right? You're down yesterday, you sell. If you're up today, you might buy. So I would say, you're talking days, not necessarily hours, but it would depend on the strategy and, depends how actively managed they are.
I mean, you think about Citi, just the most global of all firms in New York, London, Hong Kong. Your traders talk to everybody. What's the chatter been over the past couple of days? Any panic coming back, or are they just saying, it's pretty orderly trading here?
Yeah, I would say we haven't seen outright panic necessarily. Yesterday, we were about 33% better to sell on the desk, which is a significant amount of risk reduction. In tech, you were 2.5 to 1 better to sell. So we definitely saw in tech yesterday some people taking out risk. That said, through the pipes, it looked like retail was pretty actively buying those tech stocks. So look, people that wanted to be in NVIDIA or SMCI or ARM or one of these stocks may be looking at this pullback as them getting a second bite at the apple in terms of getting back engaged. And if that's the case, that's positive.
So within your securities analysis team at Citigroup, what do you do with Google? Do you let the thing settle down for X number of days and then repurpose Google? My head is spinning over, Paul, you understand it, I don't, gamma trading and all the rest of it. For conservative, normal, hey, I've got to fund my retirement plan investors. This is an opportunity, right?
I think ultimately people will look back at these Google earnings and say they were actually quite solid. Obviously, the YouTube side of it was a little bit weak, but the other sides were positive. The read across from a Google perspective, I think, was on the CapEx side of things. The AI trade this year, there's been an ongoing debate of, do I own the CapEx spenders or do I own the recipients of that CapEx? And I think what you saw with Google kind of guiding down a little bit on the CapEx side, it really got people's antennas up. So the issue there is not a Google issue only. It is a feedback loop to the other parts of the ecosystem.
Apple does a very clear presentation. I sit there at 4:12 p.m. People go, "What do you do when you go home?" I walk the dogs. I take the famed surveillance nap. I got a beverage of my choice in my hand, and I'm looking at the Apple numbers, and I'm seeing this hysteria out there within financial media, and I'm looking at the cash flow statement, going, what? Why? And I don't mean to pick on Apple. It could be any of these other stocks, like Google the other day. They had a solid quarter.
Solid free cash flow. How about that? As Tom's talking about some of those big names, we've seen a real kind of rotation the last few weeks into the small cap. Looking at the Russell outperforming the small cap Russell 2000. Is that a thing?
I think it's a thing if you believe in the soft landing. Okay. So I think what you saw late last year, middle of June on the June FOMC and July 11th on CPI is when you get soft landing data, which is solid jobs and downward surprises on inflation, especially if the Fed wants to cut in the background, people gravitate toward these soft landing trades. And the target for those trades is small cap, it's regional banked, it's things of that nature. So I think what you've seen is the market sort of going through a soft landing trade for the moment. We think it's more tactical. I don't necessarily think that's sustainable over a medium-term period because Andrew Hohenhorst and team do have a deceleration in growth. A lot of people have said, oh, small cap's an election trade. I think that's reverse engineering a narrative. I think this is very much a macroeconomic data trade.
Keep talking. The market just went green with Stuart Kaiser. Where are we at the end of the year? I understand that's deep and long-term for you. But where are we at the end of the year?
Look, our research side's got Kronert there at 5,600 end of year. I think we're higher than we are today at the end of the year personally. Obviously, if we get a recession, that's not going to be the case. But our view is, as I mentioned, you run long equity risk unless and until that U.S. job market cracks. Yep. If the job market remains strong, you remain long equities, and I think we're higher into year end in that case.
Hugely valuable. Can't say enough about it. Stuart Kaiser with Citigroup, head of U.S. equity trading strategy. He lifts the market, green in the screens, SPX flat, Dow up 56 points, VIX 18.23. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Former President Donald Trump leads Vice President Kamala Harris in Arizona, Georgia, Michigan, and Pennsylvania, according to Emerson College The Hill polling. In Wisconsin, Harris and Trump are tied at 47%. Meanwhile, President Joe Biden, in his first speech since ending his re-election campaign, said the best way forward is to pass the torch to a new generation.
But this sacred task of perfecting our union, it's not about me. It's about you, your families, your futures. It's about we, the people.
Former RNC chair Reince Priebus.
One of the most remarkable things about this speech was that Joe Biden didn't address the elephant in the room. He didn't explain to anyone listening why, in fact, he decided to step down.
Priebus spoke to ABC. Israeli Prime Minister Benjamin Netanyahu meets today with President Biden and Vice President Harris at the White House, a day after his fiery defense of the war in Gaza in a speech to Congress. The president says ending the war will be one of his key goals in the final months of his term. We spoke with Middle East expert Julie Norman of University College London.
On the one hand, I think we are closer to a ceasefire than almost any time before. With that said, we've gotten close before and things have fallen apart at the last minute. So until it's a done deal, it's not done. I would say even with a ceasefire, though, this war is not just going to close down and go away.
UCL's Julie Norman notes Netanyahu insisted in his congressional speech that he wants Israel to maintain security control of Gaza. President Biden's ceasefire plan calls for a European and Palestinian presence. First Lady Jill Biden will be leading the Olympic delegation at the opening ceremony in Paris. It will be her first public appearance since her husband made the decision to drop out of the 2024 presidential election. Vice President Harris's husband will lead the delegation at the closing ceremony next month. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael, thanks so much. I think, Paul, we got to dissect what Stuart Kaiser was talking about here, and so much of it is time frame and the effect of the media. Would your career have been different if the craziness of the immediate social media, radio media, YouTube media would have been totally different?
Yeah, I mean, the way you disseminate information is just extraordinary. And the manner you consume information is just extraordinary. So, and that's reflected in the investment business as well, how these people communicate. But central to it's the Bloomberg terminal, I'll tell you.
Part of that was to be first, and we're going to do that here in a moment. The last time Matt Winkler was on, founder of Bloomberg News, I was incredibly rude, and we just talked politics the whole time.
Yeah.
And he's in South Africa now after writing a brilliant essay on South Africa and the success they've had on turning things around, linked into South African politics as well. So we'll talk to Matthew Winkler here in a moment. GDP, world's coming to an end, 2.8%. There'll be revisions. There'll be 2 revisions. But nevertheless, this is a word Matt Winkler taught me, ginormous.
Okay, very good.
This will be that's a ginormous number. From New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. A slight lift to the markets after U.S. economic growth accelerated by more than expected in the second quarter. GDP increased at a 2.8 annualized rate after rising 1.4% the previous period. Weekly jobless claims came in lower than expected, 235,000. Durable goods orders fell 6.6%, and the core PCE price index rose 2.9% above expectations. We have the two-year yield at 4.39%, down 4 basis points. The 10-year yield, 4.21%, and that's down 7 basis points. To earnings, New York Community Bancorp now down more than 15% as its provision for credit losses that missed. Sticking with banks, Bank of America said its board authorized another $25 billion stock repurchase program. Those shares up about 0.1%. Unilever, ADR's up 6%. The company, you know them behind Hellmann's Mayo, they reported operating margins surpassed expectations. And then you have Nestle, ADR's down nearly 0.5%. Cut its guidance, consumers turn to cheaper food. That is your Bloomberg Business Flash. Tom and Paul.
Lisa Mateo, thank you so much. Tom Keene and Paul Sweeney in New York off of huge GDP number, 2.8%. The markets lift red on the screen, now green on the screen. The 10-year real yield is something that I would look at, 1.96%. That is a higher real yield showing a buoyancy to the American economy. The last time our founder of Bloomberg News was on was when he and Shinpei wrote a piercing essay on South Africa, which in good Tom Keene fashion I completely ignored, thank you, because there was a political maelstrom at the point. Joining us now from Johannesburg, South Africa, a news bureau he opened years ago, Matthew Winkler. Matt, I was reading this week on the collapse of Zanzibar, off of Mozambique, off of Tanganyika, and what it came down to is real simple domestic politics. Crime, unrest, uncertainty. There's a revolution politically in South Africa, and you see it in the bond market.
There is something very favorable that is occurring in South Africa right now. Tom, it's always great to be with you. And by the way, I am here in Johannesburg 30 years after we started here. Wow. And Nelson Mandela had just become president. But let me say, this is a very favorable period because what has happened is for the first time since Mandela became president, the parliamentary majority, ANC, one-party rule has ended, and you now have the ANC in a coalition government with the Democratic Alliance, which I should say is a pro-business group, and the combination, according to the bond market, according to data compiled by Bloomberg, is decidedly favorable. How do we know this? There's been an abrupt turnaround in performance. South African rand-denominated securities are leading every part of the bond market globally with more than a 15% return over the past 3 months. And nothing comes close to that. Wow. And the rand has rebounded significantly, which makes a lot of sense. And economists have revised their forecasts upward 4 times since April on the outlook for South Africa. And least, and not last actually, inflation is expected to decelerate, not accelerate. So all of those things put together, bond market, as usual, is signaling to us something that is very good for South Africa.
Paul?
Matt, what does this new government need to do on the ground to really turn things around? You're there. What are they telling you?
So, as you referenced, unfortunately, the recent history has been with one-party rule, incompetence, dysfunction, crime, all of those things together. And fortunately, the people had enough, and you could say that leave it to the bond market to prove that democracy is a capitalist tool. And so what is going on right now is there's an expectation that this government actually will get some things done. You haven't seen the chaotic energy outages that were so frequent not too long ago. They've managed to put that under some semblance of control. And most important, what South Africa needs is investment, and the bond market is signaling that's underway, that's coming.
No, Matt, that's exactly where we wanted to go. We can talk about the idea of starting Bloomberg News, Paul, off a wooden desk with a Rolodex. Paul, you're too young to know what a Rolodex is, but that's how Winkler started this. And Matt, you talk about opening offices. I want to go across the span of the Indian Ocean to Jakarta, Singapore, the Malacca Strait, up to China. And the answer is China's not having a political debate like we are on isolationism. China, with a vengeance, is investing in Africa, and indeed in South Africa as well. Do you see any sense that the American politics can say, hey, we have to compete by investing in those areas?
Yes. This was, in fact, the policy of the Obama administration. You could say there's been something of a hiatus under Biden only because COVID was so disruptive, COVID-19. However, should Kamala Harris prevail, she would probably be very much in the Obama camp and pay a lot more attention to sub-Saharan Africa, including South Africa.
Matt Winkler, thank you so much. Greatly appreciated from Johannesburg today with an important essay. I'll put that out on Twitter and LinkedIn, did before, but we wanted to give that its just due. It's absolutely shocking. And Paul, it alludes back to Greece as well. Greece flat on their back.
Yep.
OMG, an election, politics, people go in a voting booth, change their mind. But again, in South Africa, it's a 30-year end of the dominance of one party.
Yeah,
so that's how we get there. And I don't think it's going to be in a presidential debate. No. I don't think it's going to be, no one's walking in the voting booth in America and saying, hey, what should we do with China's investment out there? But it's in the back of everybody's mind.
And I like the way Matt puts it in his column. I mean, at least I don't think about it this way, and I bet you a lot of people don't either. South Africa is the continent's largest economy. So if you have a strategy for Africa, you have to have a policy for South Africa, given that it's the largest economy. And again, Matt points out that the bond market is telling you it's pretty bullish on South Africa.
It's interesting to say the least. I'll throw some books out in the coming days here on ways to get up to speed with the unknown that is, at least my thought, my knowledge of Africa and what's going on there. What's going on here is a reversal. Paul, look at it. Red on the screen. World's coming to an end.
Yep.
And there's a lift.
Yep.
And it's an American economy lift. I said this to John Farrow and Lisa Bramowitz 2 years ago. I said, you know what? Corporations are going to adapt.
Yep.
And they're adapting. And, a major shout out to the people we talked to who are saying, you know what, it's really not all that bad out there.
Yeah, and the economy's main growth engine, personal spending, that rose 2.3%, also more than forecast. So, it's again it was much stronger than expected here, and again that's in the face of rising interest rates, which makes it even all the more impressive here. So again, we'll see what this means for the Federal Reserve. Again, Tom, you look at the WIRP function, the market's discounting September here, and that seems just about right, for a lot of investors.
There it is, and let me give you those levels on futures: 5,400 on SPX, 4,000. Rounded up, 40,200 on the Dow, NASDAQ 19,200 there. So churning, and we'll have to see where we go from here. And the answer is, I think we've heard from everyone. Anastasia Anarosa was adamant about this. You know what? You got to look at the earnings as they come out. And Lisa's been incredibly gloomy today. This stock down this month. I know. NYCB down 11%. Whatever.
But how about in WTI crude oil, Tom? We've been following that. That's off another 1.3% today, $76.55.
Yeah.
So that's been pulling back here. And we heard from Julian Lee just a couple of days ago talking about the global macro backdrop here. And I'm going to call it out just for you, Tom. We got Bitcoin off 3%, $64,000.
Okay. We're playing Clapton today in honor of his relationship with John Mayer. What a loss at 90 years old. JJ Kells, After Midnight.
After midnight, we're gonna chug a love and shout. We're gonna stimulate some action. We're gonna get some satisfaction. We're gonna find out what it is all about. What it is all about. After midnight, we're gonna lay it all hang down. After midnight, we're gonna shake your tambourine. After midnight.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Crisis over. That's what it is. Paul Sweeney and Tom Keene, good morning. Bloomberg Surveillance here on YouTube. Lively YouTube chat today. They were really up on the Led Zeppelin and Lisa's piercing questions there that we had earlier. Like more Lisa, chat. YouTube, put a cork in your mouth. Lisa. And Lisa asking more questions. We'll do that, folks. It's a good thing to say. The least. We welcome you on YouTube. Subscribe to Bloomberg Podcast. That's the way to keep me going, at least. And Android Auto and Apple CarPlay. Apple CarPlay worldwide, 20 countries. Paul has it. Do you use it?
No, we have a major update here. My phone is literally about to die, so my Bluetooth doesn't really work. So my Apple CarPlay is not working. So it doesn't recognize my phone.
Okay.
So this is a major issue for
Stop
Apple.
Stop the show. I think it's a conspiracy. My phone, which is not as old as Paul's, but it's old, all of a sudden it's not charging like it used to.
Yeah, it's a
conspiracy. This is
yep.
Tim Cook. It's a conspiracy.
So I will walk into the Apple store come September, the first day with a new model.
Exactly.
I'm gonna shell out the grander $1,500.
It's a racket. I mean, live chat. Get us out here. And I mean, I know some of the people on live chat, they're waiting for the flip phone.
Yep.
Ed Ludlow was talking about it.
Foldable. It's a foldable.
Oh, excuse me.
Yeah. John Tucker has the flip phone.
How dare I say that? Futures up 2 after being red. This is off a GDP number of 2.8%. From the Interactive Broker Studios, our Bloomberg Business Flash, Lisa Mateo with better questions than us.
You got it. We have futures. They are rebounding right now. Better than expected economic report. That helped ease the fears of the Fed would need to rush to cut rates to prevent a recession. So right now we have NASDAQ futures, little change up about 9 points. Dow futures, little change up about 40 points. S&P futures, they're little change too. Well, they're down about a point right now. We head to the 2-year yield, 4.40%. That's down 2 basis points. The 10-year yield, 4.24%, and that's down about 4 basis points. To earnings we go. We'll start with tech. IBM up 3%. A jump in bookings for its AI business. Also better than expected revenue. That helped out. Then we go to airlines. Travelers. They love the airline taking discounts, but it's hurting the carriers. American Airlines down 3%. Slashed its earnings outlook for this quarter and the full year. And then a change over at Southwest Airlines. They're down 3%. The company ditching that open seating policy, but say bags will still fly free. And the credit card industry loves airline passengers, right? But they may be targeting gamers. Wall Street Journal says banks, they're trying to connect with millennial, Gen Z customers with gamer-related reward points. It's coming soon. That is your Bloomberg Business Flash. Tom and Paul.
They're just going everywhere. Did I hear that the credit card rate has gone over 30%? If they top, no. The interest.
Oh, the interest rates. The interest rates.
Is it top tick
29%? It wouldn't surprise me.
Yeah. The Sweeney offspring, that's another thing they know.
Pay it in full. Yes, I tell my kids that.
It's interesting. I've been, the points guy, Brian Kelly, I think the world of, and he's had some really piercing essays here about is the game over on the mileage thing. I I don't know. What's Southwest do?
The young people are really aggressive on the points.
Oh, I'm the young people.
Yes. I mean, my daughter.
In this room, dear, you're the young people.
Yeah, they're all over it. Yeah, they manage them. Yeah.
So if Southwest Air goes to premium seating or whatever, is there going to be? There's got to be a Southwest credit card coming. I mean,
there is one.
I guess they're going to finally be like a normal airline. We'll see. Anyways, good morning to all of you. I've really been waiting for this. Brent Schutte is really gives some important wisdom out of Northwestern Mutual, where short term is 3 years. I'm not making a joke. Short term is 3 years at venerable Northwestern Mutual, and he joins us today. Their CIO. Brent, 3 years out, how do you have the courage to stay in equities when you get these short-term upsets?
Well, I think it depends upon which equities you want to stay in. And so to me, the rotation that we're seeing highlights the vulnerability, I think, and the extended optimism that is in some parts of the stock market. And I remind people, typically at the end of an economic cycle, you do have the market narrow, and the cycle's leaders become the next cycle's laggards. And so to me, I think about the rotation trade that's occurring, and this is parts of the market that I think will do very well in the next 3 to 5 years. I think about small caps and mid caps being priced more as if a recession has already occurred. And those are the parts of markets that we're trying to tilt towards, which I know is unpopular right now. But if you look historically, valuation does matter, relative valuation matters. And this is where I think there's opportunities in those parts of the market that no one previously wanted to own. And I imagine today we'll probably go back to wanting to own those other stocks again. But I think in the next 3 to 5 years, I think those are the parts of the market that will do well. But Tom, I do also want to correct you a little bit. I do think right now the market is due for a pullback overall. I think the economy is still going to hit that dreaded R word, which no one seems to be mentioning despite the data. I know the data is confusing and back and forth. I still think that's on the rise, and I want people to be more careful with their allocations today, even though I think in the next 3 to 5 years, you will be rewarded for owning those parts of the markets that I just mentioned.
So what is your allocation today, maybe versus maybe a historical norm of the last 5, 6, 7 years?
Well, we are underweight equities after spending pretty much the entirety of the last few years overweight equities, just given our belief that the risks are still out there. The data is confusing. It goes back and forth. I get whiplash sometimes listening to the show and having your various guests come on, and we talk about recession, and then recession goes away. And despite the narrative that we've had strong data recently, which I know the GDP shows, we are also seeing weaker data. And to me, the question that I think anyone in my position has to ask is, do the indicators that worked in the past not work today? Or is it just taking longer to get there because the U.S. economy was so filled with stimulus, people were so insulated versus higher interest rates? You mentioned credit card rates, Tom. You're seeing delinquencies rise among lower income consumers at a pace that is higher than the last 2 recessions. And so to me, I think there are still risks that are out there, and the longer rates remain elevated, the more rates work their way into the economy and they impact it by pushing overall growth down, which I think we'll still get.
What do we do in the fixed income market, Brent? Do we sit in the treasury space, or do we go out and take some credit risk?
Well, credit risk, you're not being rewarded for taking that risk right now.
Yep.
And so I would err more towards the sides of being higher quality. It doesn't mean that you can't own some investment grade, but make sire that you're higher quality. And I'm fearful that people are just looking at absolute rates and thinking that they should only own the 2-year versus the 10-year because it yields more. And I want to remind people that there is something called reinvestment rate risk. And so what we've been doing over the past few years is we have actually extended our duration to where we are now overweight duration. We're overweight fixed income and duration, giving our eventual outlook that there will be a recession, timing unknown. But I invite people to look on their Bloomberg and look at the output gap and tell me how many times the Federal Reserve has successfully taken an out of slack, out of output gap economy back to one that has slack without causing a recession.
Maybe off your remit, Brent, but I look at this and I'm buried in the GDP statistics, and I got nominal GDP. You forget about the 8.3% anomaly of September of last year. That was Sweeney buying the Vespa. I got nominal GDP 3 quarters, 5.1%, 4.5%, and the latest statistic, to adjustment granted, is 5.2%. And we're begging for the Fed to cut. Is that the real backstory here this morning? How do you cut with a 5.2% nominal GDP?
It's hard to do. I think investors, if you're under 40, you probably didn't live through 07 to 09, and you probably don't understand that markets do falter sometimes. And so to me, I think everyone over the last few years, and this is why we were optimistic and I was labeled a perma bull, is because I thought that policymakers would do everything. They would throw the kitchen sink at any problem that was out there because they believed they didn't do enough in 07 to 09. And they believed that inflation was too low. They wanted it higher, and interest rates were low. Why would you not add debt? And so to me, we're on the opposite side of that right now, where the Fed put maybe more out of the money than people imagine. And that's where I think people who keep arguing for that are thinking of the last decade, the last 15 years, not prior to that. We just had inflation, and interest rates are high. Do you think the Fed is going to take a late cycle economy and cut aggressively into that without seeing signs of labor market? Which by then it's too late. The Fed has actually cut before the last 4 recessions, and it hasn't stopped the recession from occurring.
Did Milwaukee survive the convention, Brent?
We thrived in Milwaukee. So Milwaukee is a great place to live and a great place to visit, and I encourage you, Tom, to come visit me.
I'd like to do that. Just make it February. Brent Schutte, thank you so much, with Northwestern Mutual. Michael Barr, I don't know if he knows this, Milwaukee's north of Detroit.
There's something north of Detroit. I thought Canada was north of Detroit.
It's norther. Well, Milwaukee's like southern Canada.
Okay.
And they make beer. Red and green on the screen right now. Futures flat. With our news in New York City, Michael Barr.
Thank you very much, Tom. Paul, Lisa. Former President Donald Trump leads Vice President Kamala Harris in Arizona, Georgia, Michigan, and Pennsylvania, according to Emerson College, The Hill polling. In the swing state polling, Arizona, 49% Trump, 44% Harris. Georgia, 48% Trump, 46% Harris. Michigan, 46% Trump, 45% Harris. Pennsylvania, 48% Trump, 46% Harris. Wisconsin, Harris and Trump were tied at 47%. Former President Trump was back on the campaign trail in Charlotte, North Carolina, and Trump took aim at Harris.
Now we have a new victim to defeat, Lion Kamala Harris.
While most Democrats have lined up quickly to support Kamala Harris's campaign, one big name, former President Barack Obama, has been holding out. But according to NBC News, that wait for an endorsement could end soon. Bloomberg government's Jack Fitzpatrick has more on why he's waited so long.
It was very interesting to see the lack of an endorsement in Obama's initial statement on everything happening. And there does seem to potentially be sort of a strategy to let voters and the grassroots take the lead to whatever very limited extent is possible.
Bloomberg government's Jack Fitzpatrick in the nation's capital. President Joe Biden, in his first speech since ending his re-election campaign and political career, said the best way forward is to pass the torch to a new generation.
My fellow Americans, it's been the privilege of my life to serve this nation for over 50 years.
Meanwhile, former RNC chair Reince Priebus says he did not hear any real explanation from the president.
Why did he decide to step down? And it's very clear. We all know the answer. The answer he decided to step down was that this was a political decision.
Priebus spoke to ABC. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Tom, Paul, Lisa.
Just moments ago, like 12 minutes ago, what I'm not going to do. Disney Hulu Max streaming bundle available immediately for the Mateo household. Disney Warner Brothers, a bundle, $30 a month ad-free, $360 a year. And I guess with ads supported is what they call that.
Yes, ad supported.
$17 a month.
Okay.
Paul?
This kind of feels like what we did 50 or 60 years ago with the cable bundle. Yeah. But I mean, that aside, what it shows is you need scale to cover your programming costs. These guys can't do it alone. Netflix has been able, with being a global brand, 280 million subscribers globally. They have the size. What these new incumbents from the traditional media companies are finding is that standalone, they don't have the scale to support the programming investments that they're forced to make.
Ad supported, $17. How much is Netflix? 15-ish?
Yeah, I mean, below that.
About 16, yeah.
16,
16,
okay.
so you're up to $32.
Yeah.
And then there's another one somewhere, Peacock.
And then you're still paying Comcast for your broadband.
And you pay the broadband,
So
and you got to have the fast broadband so you can get San Francisco 49ers football.
Oh,
and the answer is up. You're out to $150, $200.
But Warner Brothers Discovery, they don't have basketball anymore starting after next season, and that's a big blow because they get all of their EBITDA from their cable networks. They don't own like theme parks and things like that. And so if they don't have NBA basketball, if I'm Comcast, I'm going to be like, well, why am I paying you this every month?
My basic take here is what Paul just said. It looks like it looked 30 years ago or whatever. They're out with that package, $17 a month, and you'll enjoy the ads. Red and green on the screen now. From New York City, Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. S&P futures, little change, and this is after its worst rout since December 2022. NASDAQ futures, little change as well after a big tech sell-off hit the NASDAQ with its worst day since 2022. Dow futures, they are little change, down about a point. We go to the two-year yield, 4.41%, down 2 basis points. The yield on the 10-year, 4.25%, and that's down 3 basis points. To earnings we go. Honeywell down 4%, cut its adjusted earnings per share forecast for the full year. Also gave profit guidance for the third quarter below expectations, so those shares lower. Whirlpool cutting its full year forecast. Consumers just avoiding buying those big ticket appliances. Shares, though, up about 0.2%. And Royal Caribbean restarts its dividends after a 4-year hiatus. They're allowing stockholders to start sharing a piece of that strong travel demand. It's actually the first cruise operator to make that move. Its shares up about 0.2%. That is your Bloomberg Business Flash. Tom and Paul.
Thanks so much, Lisa. Greatly appreciate it. Red and green on the screen here. The VIX coming in a little bit, 18.11. A better tape this morning. The Sweeney yield is 4.41%, in a little bit, not like it was before with a buoyant GDP statistic. Andrea Felstad with us with the aspiration of luxury turned upside down. Andrea, I'm looking at the small tote Rosso and Cora Gucci bag for $3,590. And if I go across the street to Dior and look at the Dior Groove 25 bag, it's $3,700. When they don't sell those, where do they go? Do they put things on sale, or do they go to some discount store in Albania?
It depends on the brand. The LVMH brands famously discount very little. Gucci, when it was trying to get rid of its unwanted stock, discounted more. And some brands like Gucci, like Burberry, have outlet stores where you can find plenty of unwanted stock, and there's quite a lot of it at the moment because everybody's reining in their luxury purchases.
Is this carnage like before in other cycles, or is it different this time?
Yes, it reminds me of what we saw a decade ago. What's happening is the two engines of growth, China and the US, are both slowing down after this, post-pandemic boom in the US, sort of yo-yoing opening and lockdowns in China, which was unleashed around a year ago when the economy reopened again. That's now waning. So you've got those two markets that are really slowing. And when the Chinese are spending, they're traveling to Japan. And that's a tricky market now because the weakness of the yen means they're effectively paying less than in China. Plus, the costs are more variable in Japan. So as your turnover is going up, your rents are going up. So you're not getting that sort of flow through to the bottom line, right. the so-called operational leverage. So it's a bit of a tricky situation at the moment.
Paul Kering, which owns Gucci among others, from the pandemic peak is down 65%.
Yeah, it's just amazing. And they're all down double digits year to date, Tom, in terms of the stock prices. So, Andrea, when I talk to experts like you, like Deb Aiken from Bloomberg Intelligence, I always learn I have to really understand what's going on in China. So why aren't the Chinese buying luxury in New York, in London, in Paris? Because that's really been what we thought was going to be a big upside in 2023.
That's right. The travel just hasn't happened. They are shopping closer to home. There's a few reasons for that. There's the general sort of worry about the property market, about youth unemployment, about the growth in the economy. And don't forget, travel prices have gone up hugely. So you've got some VIPs coming, but for that middle class traveller that's already under pressure, they're having to find a lot more money to come to Europe or the US, and they're just not doing that at the moment. So that's been the big factor that hasn't kicked in this year as expected.
Right. Yeah, Andrea, I know you helped Brad Stone and Rascoli in Paris with the fabulous article on Mr. Arnault. Is this an opportunity, all this carnage? I walked down Madison Avenue, and I'm like, does he end up buying it all? Is this a big opportunity for LVMH and the acquisitive history of Mr. Arnault?
Yes and no. Yes, there are lots of things that are looking cheap. Britain's Burberry, for example. But he doesn't really need a turnaround, and he doesn't really need any more fashion and leather goods. What he wants is jewellery. And the real crown jewel there is Richemont, which owns Cartier and Van Cleef & Arpels, and that the shares have performed better than LVMH this year. And the chairman, Johann Rupert, has been clear in saying the company is not for sale.
So, what do typical luxury brands do in a slowing economy? I can't see them slapping up for sale, 30% off kind of signs up in their stores on Madison Avenue. What do they do?
Well, the first thing they do, they will all be cutting costs because, they've had 3 years of phenomenal growth. All the cost bases will have got a bit flabby. That's the first thing. A second thing is they need to find ways to reconnect with that aspirational shopper that has been priced out. We've seen a few price cuts. I don't think we're going to get big price cuts. What we're going to get is different products. So what we're going to get is small leather goods, wallets, mini bags. I don't know if you've noticed the trend for mini bags. You mentioned this.
Oh, no, I've noticed that, yes. You can't even get your damn cell phone in the bag. Why buy it?
Exactly, yeah. There's all these TikTok videos of what you can actually get in these bags. The reason they're doing all these mini bags is you can still have a slice of the brand, but it's much cheaper. Okay. Things like sunglasses, fragrance, beauty. Right. Yeah, all accessible ways. Novelty. So Loewe, which is an LVMH brand, which is absolutely on fire at the moment, they do these raffia bags. And, they're not cheap. I reckon they're, $400, $500. Yeah. But compared with $5,000, that looks, attractive. And what you find in luxury is once you have a taste of buying luxury, you don't want to trade down. You might do it in clothing, you might shop at Zara, but you won't swap the shoes or the bag. Well, so if you can find a way to appeal to those customers with something different that doesn't feel like trading down, that's a way to stimulate sales.
Andrea, I got to impress you so you'll come back on again. Now, LVMH with some Americans takes out Tod's, which owns Roger Vivier. You got to be kidding me. You go in the Roger Vivier store, you can't find a place to sit. Explain how Arnault buys a fancy pants Italian-French shoe company that did shoes for Dior. Is that going to be like the next thing, the new?
Well, they've taken it private with the backing of LVMH. The question is, will it get sold to LVMH? This was was quite a controversial thing at the time because some shareholders didn't think they were paying enough. So we will see how that sort of situation develops.
When you go in and you buy the shoes, you're paying enough.
Well, Tom, the Roger Vivier flower strass buckle pumps, $2,095.
No way. I'm shocked by that. Andrea Felsted, go away. Every time you're on, it costs me money. Andrea Felsted, encyclopedic with Bloomberg opinion. Lisa, you were taking notes over there.
Well, I like the idea of the little bags, the cute little bags.
You can't get your phone in it. What do you do with a cute little bag?
But you have a piece of the luxury, just a piece.
Somebody at home got a cute little bag and they sent it back because they couldn't get their cell phone in it.
Roger Vivier women's flower strass satin. This is for Lisa. $1,995.
Yeah, one of my agents, Fiona. Fiona's a huge on Roger Vivier. She doesn't want me in it, but she, various and sundry others. Andrea Feldster on the blow up, and as I mentioned, you say, well, Gucci's down 65%. When do you go long Gucci? I have no idea.
Don't know. I mean, yeah, you're right. It's down 30% year to date. What do you do with that? I mean,
I don't know.
Having read that book and seen that movie, it's hard to get fashion right, and you got to have the right person in there. I don't know how you do that.
I don't know how you do it.
I have no idea. That's very tough sector to invest in, I would think.
A couple Bloomberg Business Weeks ago, we had Donald Trump on the cover, and before that, Mr. Arnault of LVMH. Can't say enough about the Stone Rascoway effort on Mr. Arnault. Look for that from Bloomberg Business Week. We need to get the markets open. GDP for the June quarter, 2.8%. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo alongside Tom Keene and Paul Sweeney with your opening bell report. So how are the markets going to react to economic data out this morning? We learned U.S. economic growth accelerated by more than expected second quarter. GDP increased 2.8% annualized rate after rising 1.4% the previous period. And your weekly jobless claims came in lower than expected. Core PCE price index rose 2.9% above expectations. So let's get to it right now and see the reaction. S&P 500, little changed, up about 3 points, 5,430. We have the Dow, little change, down 22 points at 39,836. We have the NASDAQ, little changed, up about 15 points at 17,358. We have the 2-year yield, 4.42%. That's little changed. And the yield on the 10-year, 4.26%. That's down about 2 basis points. To commodities, we have spot gold lower, 2,368 an ounce. Brent crude, $80 a barrel. WTI crude, $76 a barrel. At the open, want to check in with the airlines because we've been talking about American, Southwest. We have American down 1%. We have Southwest down nearly 1%. That is your Bloomberg opening bell report. Tom and Paul.
Lisa, thanks so much. Arguably the most important conversation of the day, linking in our economics, finance, investment, international relations, American politics, and he was on a horse out west that looked Olympic ready. Michael McKee joins us right now, running all of our economic coverage. Mike, I'm going to cut to the chase. I go down the wonderful Bloomberg slice and dice of this first look at June 30 ending GDP. I got a nominal GDP of 5.1%. There was nowhere in my literature, going back to when I was in high school, that a Fed can cut rates at 5.1% nominal GDP. That's just nonsensical. What does Jerome Powell do?
They're not going to cut rates next week, but they are going to probably signal September. And the reason being is, and you were just pointing out Neil Dutta's recent note, and I agree with him, since the end of the second quarter, we have seen a number of data points that suggest the economy is slowing down. We don't know how fast, and we don't know how far it's going to go, but the Fed can afford to take out insurance now because inflation continues to fall.
Do they need to wait for October 23rd or whatever to act? Are they that exposed where they need to see Q3 GDP ending September 30, roughly October 23rd?
No, that raises the risk of waiting too long. There will be a number of data points. We'll see what happens with employment next week. Unfortunately, it comes after the Fed meeting. But if we saw unemployment rise and we tick off the Psalm rule, it will freak out some people in the market, scare the horses, and we'll have an issue for them. And then we get another CPI report in mid-August. So, we get both before the next Fed meeting, which is September 18th. So they'll have enough data to make decisions on by then. And I think what they'll do next week is just set the markets up.
Paul, the real yield rockets from 1.92% to 1.99%. We're going to get a 2% 10-year real yield off that GDP report.
What's driving the 2.8% GDP, Mike? Is it the consumers, manufacturing? What's it?
It is consumers, 2.3%, and businesses, non-residential fixed investment, which is sort of the proxy for business spending, 5.2%. So we're seeing strength in the consumption side of the economy. We had a bad trade number. We had a good inventories number, and they kind of offset each other. Some people are pointing to government consumption up over 3%, but the issue there is that most of it was not the amount that the dollar amount is not that great, even though there was a jump in defense spending as we replace all the stuff we're sending to Ukraine and Israel. So consumption is what the Fed wants to see, and consumption is what's affected by interest rates. And real final sales to domestic purchasers up 2.6%. That's pretty strong.
And we also got initial jobless claims print today, kind of right in line with what expectations were. Labor seems okay too, right?
Labor seems okay. It's always tough in July because you get businesses that shut down to retool, manufacturers, and so it's hard to get clean readings. But the other thing is we had that hurricane in Texas, in Houston, and the last 2 weeks we have seen Texas lead the nation in initial jobless claims. So obviously people are out of work there for a while, and that should fade. And so it doesn't look like anything to worry about on the layoff side at the moment.
Tell me about this phrase that's going to come up a lot here. And as you say, they're blind into the Fed meeting without a jobs report. And I'm thinking I could take this from freshwater economics over to Chicago, where microeconomics is more microeconomics, even out to San Francisco, and certainly the heritage of the Texas Fed, which is this phrase ex post. Every central bank waits. Define what Mike McKee thinks the ex-postedness is of the Fed right now, the character of it.
Well, they're looking to make sure they don't let the economy go too far either way, which is what they've been saying lately, is we're balanced in our risk assessment. And so when you look at what could happen going forward, it looks like the economy will slow and inflation will continue to come down. What they can't know is by how much either of those things happens. So they may, on an ex post basis, start to take out insurance. And that would be starting the rate cuts in September.
Did we do this analysis with Greenspan or Burns, or you were around for McChesney Martin? Is this a new thing?
It's not a new thing, but the Fed has gone in and out of the idea of being preemptive.
Exactly.
Right now they're reactionary. And they've kind of gotten rid of preemptive.
Are we asking
in recent
too
years.
much of them?
Of course. I mean, they have one big tool, a hammer, and not everything is a nail, even though people on Wall Street like to think that. So you can't fine-tune the economy.
Paul, I think it's your fault, Paul. What happened here is we had Bunker Ramos. Okay, and the Bloomberg showed up, and fancy guys like you started using the Bloomberg, where we're gaming this tick by tick every day. Mike McKee and I remember McKee used to sit there in Washington with the reports on his desk, and he had a quill with a pile of ink that he would write it. The world's changed, and everybody's microanalyzing this stuff.
Exactly. That's what, and keeps certain people employed, right?
Well, it does keep us employed. I mean, the Fed puts out a forecast. Or 19 individual forecasts every 3 months. Wall Street makes a new forecast every 30 seconds.
Right.
So there's a difference there.
So, I mean, I guess the people that Tom and I talked to on the show, I think probably more of the consensus is that the risk here for the Fed is that they're too late and that they wait too long. And so does that kind of, everything just kind of point to a September cut?
It does. The Fed has been nervous that the risks were evenly divided, and now it appears that the risks are getting more on the growth and employment side than on inflation. We'll get a PCE number tomorrow that should be friendly, and it just suggests that it's time. Okay. There's an old, Tom will remember this, Jim Bullard, we used to have him on, he would say, when you look at the interest rate that we have right now and ask, is it appropriate for the economy we have right now?
Right.
It's not. And that's basically, I think, the way the Fed's going to look at it.
One final question here. Is Atlanta GDP, is that of value to you, that they're looking at it, am I right? It's an immediate look at the right now economy?
Yeah, they just incorporate a as-if forecast throughout the quarter.
Do you find it a value?
It's a value to get an overall sense. There has historically they haven't been right on, but the last 2 quarters they have. Right. So I'm sure that Dave Altig and his group are down there.
Is that data just in their Atlanta region, or are they look?
No, that's national. They just take and St. Louis Fed has one of those, and the New York Fed has one of those, and Bloomberg Economics has a nowcast, and they just take all the data and on a day-by-day basis say if it were like this.
In the last hour, Craig Breslow, trade deadline, Red Sox. They had 20 runs scored against them.
I'm not sure how that happens. Yeah.
What do they do, Mike McKee? What do the Red Sox do here at the trade deadline?
Well, they cheered everybody up by signing Alex Cora last night. Now,
that's good.
Somebody wrote a story the other day that said, "Here's what other teams think the Red Sox will do. They'll go after relievers." Well, there's like 32 teams in Major League Baseball that are going after relievers. So what are you going to do? Although this morning, Gabriel Starr, who writes about the Red Sox for the Boston Herald, had a column that I called the Emily Latella column. Never mind. Remember how everybody was saying John Henry's terrible, and the Red Sox aren't trying to compete. And now they've signed Alex Cora.
It's been a surprise.
And they say they're going. Breslow says they're going to go be active in the trade market, and so it's like, oh well, never mind.
Yep.
Okay, Mike McKee, thanks for showing up. It's great. Driving all of our economic coverage. He's got a title. I think, Lisa, you gave him this title. International Economics and Policy Correspondent.
Nice.
I think Lisa needs a title like that.
He's my eco guy.
Oh, boy.
He's our eco guy. That's
Michael Barr, he's just the news guy.
Gets his
With
own
our
function.
news in New York City, Michael Barr.
Thank you very much, Tom, Paul, Lisa. Former President Trump was back on the campaign trail in Charlotte, North Carolina, taking aim at his new opponent, Vice President Kamala Harris. Trump repeatedly mispronouncing Harris's name on purpose as he criticized her role in the Biden administration.
This November, the American people are going to tell her, no thanks, Kamala. You've done a terrible job. You've been terrible at everything you've done. You're ultra-liberal, and we don't want you here. We don't want you anywhere. Kamala, you're fired. Get out of here. You're fired.
Former President Trump is adjusting his message to take on Vice President Harris, including on an issue that many Republicans have been trying to avoid. Bloomberg government's Jack Fitzpatrick.
Trump at his recent rally saying that on abortion, Harris is radical and crazy is at least an acknowledgement that he can't simply run from the issue. So it's a very interesting instance to see him lean into that issue. I'm not sure if we can take away that he will consistently do that on the campaign trail for the rest of this process, but a notable shift certainly.
Bloomberg government's Jack Fitzpatrick in the nation's capital. President Joe Biden framed his decision to drop out of the 2024 race as a bid to unify the nation under a new generation of leaders.
It's been the honor of my life to serve as your president. But in the defense of democracy, which is at stake, I think it's more important than any title.
It was Biden's first speech since ending his re-election campaign and political career. Israeli Prime Minister Benjamin Netanyahu will meet with President Biden and Vice President Harris in Washington today. Netanyahu heads to Florida tomorrow to meet with former President Trump. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, Lisa.
Michael Barr, thanks so much. Reid Hoffman out on Twitter, of course, with all he does for technology. And I guess he gave money to Vice President Harris. No surprise there. But it's this is speculation and rumor, folks. I want to make this clear. It's not reported out. He's already talking about, but then you got to move this person out, move that person out. And you wonder, Paul, within all of this, through the campaign, how much will she be like a Biden administration if she wins?
Who knows? Yeah, that's right. Who knows? I certainly don't know, but I guess that's part of the whole process over the next several weeks, where she has to, really, give us a sense of who she is and what she wants to do in terms of the administration. Because quite frankly, I don't think we really know. Maybe that's typical for vice presidents. You don't hear a whole lot about them.
What Paul and I are going to do is, when we're in agreement on this, we're just going to lean on our political experts.
Yes.
That's all we can do. Jack
plenty of them.
Fitzpatrick there earlier in the morning with Bloomberg at daybreak. That's a Moscow Nathan Hager property. And Bloomberg he doesn't come on with us.
We were just talking to Matt Winkler, and Matt Winkler, of course, built one of the great news bureaus down in Washington, D.C. for Bloomberg News. Lots of really smart people down there, so we'll be leaning on those folks.
Yeah, they put up with Margaret Collins as their leader down there.
Good stuff.
Of course, we'll look to David Gurr and, of course, balance of power. Katie Lyons and Joe Matthew with that. It's sort of been nice to have a day off from politics. We had Wendy Schiller in, but that was on Led Zeppelin, so it was better. But it's sort of been nice to have a day off from politics. Somehow, I think we'll be back on it tomorrow. The Dow up 90 points, SPX green, NASDAQ down 0.1%. That's a lot better than you thought 2 hours ago on the NASDAQ 100. Important earnings coming up. So earnings this morning, Honeywell, I haven't had time to dive into. They're always important. From New York City, Paul Sweeney and Tom Keene, this is Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got a bit of red and green on the screen. NASDAQ down about 0.3%, 62 points, 17,277. We have the S&P 500, little change, down about a point at 5,425. The Dow up 0.3 point, 116, up 0.2%, 116 points, 39,966. The 2-year yield at 4.40%. That's down 2 basis points. And the yield on the 10-year, 4.24%. And that's down 4 basis points. We have spot gold lower, $2,368 an ounce. Brent crude, $80 a barrel. WTI crude, $76 a barrel. Want to talk cars? Shares of Stellantis lower, down 8%.
Chrysler.
Yeah, considering price cuts, bringing back older models. You like the Dodge Charger? Might be coming back.
Matt Miller's got the Dodge Charger.
There you go.
Scat Pack, whatever that is.
Oh my gosh. Then we go to Ford. I wonder if it was a Ford, down to 17% right now. Quality problems with the vehicles led to a surge in warranty costs. Nissan slashed its earnings outlook, said there were weak sales in Japan and the U.S. Those shares down nearly 7% in Japan. And then cars taking a hit, but motorcycles doing a little bit better. Harley-Davidson up 7%. Second quarter revenue beat estimates. Better sales on pricier bikes. And shout out in the live chat to someone who says, they can see me on a hog. Thank you. Oh, by the way, Paul Piaggio, owner of Vespa, down 3%. That is your Bloomberg Business Flash.
That's because he's got to go in for the obligatory $328 tune-up.
Yes,
exactly. You haven't gone in. This is a joy. This is someone Paul Sweeney knows from Duke. There are young Turks and academics, and in this case coming out of Stanford, who just start writing. His book, Goldilocks Globalism, has created a stir. And Paul, it centers around, like in 2016, both candidates walked away from TPP. They walked away from the Pacific.
Yep.
And the only tool we have is a blunt instrument of tariffs.
And we've seen that from both the Trump administration, but staying with the Biden administration as well. We're seeing more and more talk, more and more tariffs. I guess, really saying it's part of economic security, and that's something new. Tim Meyer joins us, associate professor of Duke Law. Tim, can you put into context why we're seeing more, I guess, economic policy being vested in the presidency as opposed to Congress?
Sure. So, I think presidents have long used foreign policy as a vehicle to get around gridlock in Congress. The president has long been thought to have a pretty wide degree of latitude in making foreign policy. It's very common to talk about presidents, especially in their second term, pivoting to foreign policy. And one of the things that we've observed since President Trump first took office in 2017 is that foreign commerce, commercial policy, has kind of gotten wrapped up in that bubble. Congress has granted the president a pretty broad degree of discretion in setting trade restrictions in particular, in negotiating new trade agreements. The president, multiple presidents have kind of treated it as their prerogative to go out and negotiate new trade agreements. President Trump obviously treated it as his prerogative to impose a wide degree of tariffs on steel, aluminum, imports from China. Obviously, he tried to regulate foreign investment in businesses like TikTok. There's some question about the legality of those actions, whether or not that goes too far in terms of cutting Congress out of the sort of policymaking framework. But economic security has been what the Trump and Biden administrations have really leaned on to say, look, this is a security issue. This is for the president.
So I guess where is Congress on this? I mean, again, if I were in Congress, I think the framers wanted Congress to have some of these powers.
Yeah, so if you read the Constitution, that is what it says. So the Constitution makes pretty clear that Congress has authority, exclusive authority, to regulate foreign commerce. Congress also, when we talk about tariffs are just taxes, right? They're just taxes on imports. And so the power to set taxes is also for Congress in the Constitution. Really, for most of the first 150 years, Congress did set tariffs. And it was really in the 1930s that, as part of kind of building out of the Great Depression and negotiating what ultimately became the World Trade Organization in the 1990s, that authority over tariffs really started to get delegated to the president. Yeah, go ahead.
Well, I'm going to go to Smoot-Hawley. You got a guy from Utah, a guy from Oregon. They blow up the world in 1929. We all know what happened after that. Do you look at Trump-Harris, and there's no difference in we're going to get them, we're going to get China, and Trump and Harris, whoever, is going to be on the edge of a new Smoot-Hawley?
So President Trump is clearly talking about ideas that are in that ballpark. He's talking about an across-the-board 10% tariff. He's talking about 60% tariffs on Chinese imports. That's clearly in the Smoot-Hawley range. And there have been estimates that say, look, that amounts to roughly a $1,700 per year per household tax increase, effectively, that President Trump is proposing. I don't think Vice President Harris is talking about anything in that range. As you all mentioned, the Biden administration has by and large continued some of the tariffs that President Trump imposed when he was first in office. They've tried to be a little bit more targeted, I think, in some of what they've done, particularly in kind of trying to calibrate some of the tariffs on China. But I don't think from Vice President Harris you're likely to see anything like the sort of 10% across the board tariff hike that the former president is proposing.
Is there a sense that Congress is going to fight to get some of this power back?
Yeah, I think there are folks in Congress that are interested in doing that. When President Trump, when he was first sort of rolling out these tariffs in 2017, 2018, 2019, you saw some bills actually introduced mostly by Republicans in Congress that would try to claw back some of the president's authority to just set tariffs without so much as a buy or leave. One of the interesting things about this year, the kind of end of the 2024 year, is that with President Biden stepping down, with former President Trump running for office again, making this, similar kinds of ratcheting up proposals, there might be a window in which we could see Congress try to take some action to claw back some of this authority that it's given the president.
Just one more question, if we could. What is your best outcome to either peel back tariffs or restructure tariffs, say in February or March of next year?
So, I think that what would ideally happen here is that Congress would pass a statute that would amend a whole bunch of existing authorities that the president has and say, look, the president has authority to impose new tariffs for a certain period of time, say 90 days, 180 days, in case there's some sort of emergency. And then those tariffs automatically sunset unless Congress enacts them by law. And that gives the president the flexibility to deal with actual emergencies without creating the kind of situation we live in today, in which the president is basically using tariffs to set what amounts to sort of domestic tax policy. And that would really restore Congress's role in setting what is effectively tax policy.
This has been wonderful. Thank you so much. Tim Meyer with Duke Law for Paul Sweeney.
Sure.
It's a big deal down there.
Yeah. I mean, the law school is right next to the business school. I made a big mistake by taking one class at the law school.
How'd
big
that
mistake.
work out?
What I should have done, you're allowed to take one class out of the business school. I should have gone on up to the School of Arts and Sciences, taken a class on Irish literature or something like that.
Duke basketball history.
History, exactly. But no, I go to law school. The kids work really hard. They're really competitive. I had to actually work in that class, not what I was looking to do in business school. I was coasting through my 2 years of business school like we all were, but the kids in law school take it seriously. So
it's
anyway,
serious.
Open my eyes.
A lot of people out there. John Mayall is dead at 90, and the story of this song it's got to be the most famous story of recording. The opening riff was Duane Allman.
Really?
And yet it's completely associated with Eric Clapton. Clapton and Layla for John Mayall.